We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back everyone to Capital Mindset Live. Hope you guys having a great day as always. Hope your weekend's doing really well. We got some things to talk about. Discussions that we're going to be had are or can be found somewhat in the title, but more descriptively in the description below. So we're going to get started because I haven't done a portfolio update publicly for over a month now. So sometimes I forget when's the last time I did it publicly because I do so more often with the club members. But this one's going to be an update on the personal holdings, not the holding co. So it's not really much. Not much has changed. I'd say it's pretty standard, if anything. But let's see. Do we think?
Yeah, you mistyped your YouTube poll.
Oh, I
Yeah,
mistyped the YouTube
you missed
poll.
the letter K at the
Do
end.
we think?
Yeah.
You know what?
This is why we can't have nice things.
Yeah, because this is what happens when I set it and then like go rush to get some drink. So
Yeah.
let's do. Well, I'll ask it. I'll re-ask it. So, do you think there is an AI bubble? Thank you guys for catching that. Because otherwise I would not have looked at it until I closed the poll.
Oh.
All right, there we go. So the question has been re-asked, so you guys can go ahead and let me know your thoughts. And then once we're done with the portfolio update, we'll actually get started on that topic because that has something to do with CRM. All right, so portfolio update. Let's get started. So let me move you guys over here. Let me move this over here. And I can clear all this crap out. Let me... sometimes I'm like, why do I have so many tabs open?
While you're doing that, some
Let me
admin stuff,
get
please
open.
be sure to consider to like, comment, and subscribe.
Oh, thank you. Yeah, I'm always bad at that. All right, let me make sure this is zoomed enough in where people can see it properly. Okay, present screen.
Doing all right, Fabio?
Yeah, I'm doing great. I mean, today's been a pretty relaxed day, in my opinion. Okay, we'll get to all the comments because I see people are putting in comments. All right, but you guys can ask any questions you guys would like. So as far as the portfolio goes, on the personal side, nothing's really changed with Meta, but I'll say that I have been buying Meta in the holding company. And yeah, going down the list, I mean, there's pretty much more additions to VRT. I'm going to be pretty quick because I'm only giving myself 10 minutes. More additions to VRT. I actually ended up buying Salesforce. The title is not misleading. I actually bought quite a bit of Salesforce, not like crazy amounts, but for the first time in a long time, I bought a meaningful amount. And then in addition to that, I also added a new position, Elf Beauty. This was within the last month while I was actually on vacation. So club members, they already knew about that investment. We did a whole pitch on that inside the club, and the earnings were pretty good. We can talk about that briefly later, but just kind of getting through all the positions real quick. There also has been, I'll talk about a position I might be selling here. So kind of talking about the future, and that's Allison Transmissions. I'm kind of on the fence about getting rid of this position to free up capital for other things, but I still have a decent amount of capital left over in reserves, so to speak. So I can kind of get away with keeping that there. But we'll see what I do. And then I've also started to buy some REITs, but we'll get to those, the new ones, because they're down towards the bottom. Grab holdings, nothing's changed too much there. I've been buying in the holding co, but not so much in the personal. And then Walt Disney has actually made it back to the portfolio. We sold after the activists lost, and that was in the last update. So actually now we rebought Disney. We'll see how that one turns out, but I'm going to be hopefully buying in a little bit over time. I want to see if we can get to the 90s and maybe even in the 80s, and that would be kind of exciting there. And then there's some new positions. One of them I want to get to a really sizable portion of the portfolio, and that's NMIH. As a percentage, it's actually really small in the personal holdings, but I built it out a lot more in my holding company. But NMIH, we can talk about that later if people have questions on that company. I really like the prospects with that. Starbucks, can't forget that one. The Triple Cross, the Three Stooges all talked about it. they were all upset, so I had to buy it. Shout out to the Starbucks cult members out there. For those of you who know who that is, there's another YouTuber who I'm friendly and cordial with, and he leads the Starbucks cult. So in fact, let me go ahead and let him know that we're here live, so so I can tell him that we're going to just dedicate a whole section of Starbucks, but we won't. We're just going to lie to him. So let me go ahead and do that. Oh, where is he? Always stuck in my head, the old theme song.
Yeah.
Okay. All right, and then finishing up, nothing's happened with CrowdStrike, and then 2 new positions towards the very bottom that your eyes might have caught, and that's Sun Communities, which has been in the portfolio before. I'm re-adding. Remember when last time we sold, the update that I gave everyone was I thought we would have time to build out a position here, and looks like it's basically actually gone literally nowhere since we got out. So rebuying now, and we'll see. I think this time I'm going to be keeping it and building it out more. And then the last one towards the very bottom, I'm not too shy because I don't get that many views to move a stock like this, but and plus most of you are not going to even buy it, so I'm not going to be able to affect change. But it's Parks America.
Oh, you did it.
Hey, it's right in front. I can't hide it anyways.
Yeah.
I would have blacked it out. I probably should have blacked it out. But yeah, there's I guess a larger channel that's already kind of talked about, and they're actually affecting change in the company. But some of the sells was Corpay, KKR, Booking, Ingalls, PWR was already updated last time. Disney is also down there. That was from the last update. I kept it. And then Palo Alto Networks, which I think was already updated the last time. So the new ones that are towards the top, Corpay, KKR, Booking, and Ingalls. Basically with Ingalls Incorporated, I saw that margins might not be going in the direction. So I just want to say that I think similar to SUI, I think there'll be time where we can add it, similar to what I said in the club. So not to like gatekeep what I say or my ideas on that, but I think we'll have time on the investment. Corpay, that was actually a pitch from one of our analysts, and I trust their judgment a lot more than my own as far as like what is going on with this business. And I did it under their let's call direction, basically a recommendation that is likely they're going to have a bit of a struggle, and it turned out they did. So they're continuing to sell off, so we might actually end up rebuying at some point in the future. I liked the pitch that they provided. I liked the prospects of the business, but for the time being, we're out. KKR, I just didn't feel like it really fit the mold of my portfolio. It didn't really attach itself to a theme that I really cared for, and I wanted to address or put more capital into my core ideas, being mainly data center spend, cloud infrastructure, hyperscalers, and then I have some rounding positions in media, and you could say some food, and then we also have now beauty, one beauty company. We can talk later about we are going to talk about some fashion brands, and one in particular that's an ugly fashion brand that's been a real winner. And Bacon here, he's a huge proponent of this company. We'll talk a little bit about it.
Yeah.
And you know what? I'm going to shout out Dividend Dude because I see you in the chat, and I know you're also a holder. Okay, so heck yeah. All right. Okay, so I know some of you might be shocked or whatnot with KKR because I did give it high praise. I still think it's good. Andrew still holds it. Andrew loves KKR. So just because I sell something doesn't mean it's bad. It just means maybe it doesn't fit. There's like a million reasons why I could be selling something. Keep in mind also that, the personal holdings doesn't show any options. I've said that from the very beginning since I started. I think that there are some people out there that might have the wrong impressions. I do not share my options holdings. I do not share my fixed income holdings. I only share my common stock equity holdings. And then on occasion, we'll do the portfolio update for the performance. And then within the club, they see everything. They see options, stocks, fixed income, etc. So keeping in the tradition of the Capital Mindset portfolio updates. So with that being said, how are we on time? We're at 11 minutes. We got to get to Salesforce. So that concludes this. If you guys have any questions about this, you just ask it in the chat. Well, actually, we're good on time because I think the first minute was introduction music. So
It
we're
was,
actually
yeah.
right on time. Okay. I'm sorry, Andrew. I'm sorry. I know. I'm sorry. I'm sorry. Co-parter. I'm sorry. No, I'm kidding. It's good company. It's just not for me at this time. Okay. We can talk about this definitely because
Oh, no.
Bacon here can be a good representative.
I can't.
All right. So we're going to talk about Salesforce. Bacon loves Salesforce. I forced him to buy it. I'm not gaslighting. I did for the audience members. So you are a Salesforce shareholder now, aren't you?
Yes.
Okay, good. Because I'm yes. All right. But anyways, so Salesforce went through a bit of a turbulent week, so to speak. So I'm going to also highlight something because you guys wouldn't know this if you guys aren't club members, but I did actually blunder it quite badly. So I just wanted to highlight that because you wouldn't see that actually within the personal holdings. I have a really good cost basis because I accumulated Salesforce back in 2022. But what you guys don't know, and I'm going to highlight behind the scenes or something that was done behind the scenes, is that I actually accumulated Salesforce before earnings. And for the holding co, it didn't end up being like a infinitesimally small amount. It wasn't like $100. It was like, decent chunk of change. And I got clapped on those. So I think the very next day, the portfolio was down for the day because of that decision, but ended up not being down that much. But yes, if you kind of combined in totality, I mean, it's just like a blip on the radar for like the Salesforce position, but the execution could have been better. One joke that I had was like, if I had known that Joseph Carlson was buying Salesforce, I would have never bought it. I would have waited. It was like, oh, okay, kind of. I'll wait for that. But I ended up buying more Salesforce on the dip. So what we ended up concluding, and I say well, basically, I mean, when some big move happens like that, of course, a lot of people are going to get into voice chat and they're going to discuss and go back and forth. It's really a nothing burger. So what we kind of saw from the earnings is a couple things. I'll talk later about the sentiment change between retail investors, but they missed on the guidance for top line and exceeded the guidance on bottom line, so earnings. So guidance on net income was actually pretty good. Guidance on the top line was not, wasn't up to expectation. So the concerns that analysts might have with that is and they ask this, shouldn't you be more conservative with your bottom line guidance because your top line guidance isn't, up to snuff, so to speak? Because the concern might be that if your top line is actually tapering down, maybe your bottom line is also going to get harmed. Your margins are going to get squeezed a little bit because right now, the narrative between retail investors on FinTwit and some other platforms is like artificial intelligence is like taking over the space and it's going to take up all the spend. Well, that may be true to an extent that currently the attention of a lot of IT spend is maybe going towards artificial intelligence products. That doesn't negate or take away from Salesforce's core business, in my view, longer term. I view it as temporary, if anything. And while we might give it credence now, I think longer term, it's just not going to look like all that big of a deal. Now, Salesforce has a form of business where it's license-based in the sense that what I mean is like seat-based software, not license-based, seat-based software. So it's a SaaS business. We call it seat-based SaaS. And then there's use-based SaaS. So right now, a lot of people in the space are bearish seat-based SaaS and saying that more use-based SaaS are going to thrive. You can think of companies like all the hyperscalers, Snowflake. Now, to an extent, I think that usage-based SaaS is also going to do really good. But in the grand scheme of things, while in the now, seat-based SaaS is kind of getting hit hard. And when I say hit hard, the growth has slowed. I don't think in 4 or 5 years we're going to see it as like, the end of the world for seat-based SaaS. If you guys work in, various companies out there in the world, I don't know what you guys do for a living, but chances are you may be actually using a Salesforce product, whether it's for data analytics, whether it's actually for your sales and marketing team. You might be using a Salesforce product. They're pretty much in every organization that I've come across. I mean, it's more of like not the standard, but it's fairly common. It's not nowhere near as prolific as Microsoft. I don't know if you have experience with Tableau, Bacon, don't you?
A little bit.
So there you go. So you've actually touched Salesforce product.
From an academic perspective, not from a professional setting.
Well, either way. And then you see, that's an example of how they get people in the workforce used to their product. So then when people go into the workforce, if you've practiced in an academic setting, then it's easier for you to just hop on and work with their products. Very similar to what Google is trying to do to break in the wide moat that Microsoft has over enterprise software. So another part that's interesting for Salesforce is the M&A part of the business. They've historically done really well. And I think that people look at the Slack acquisition as their, I love the joke that Andrew said the other day, the joke about I don't want to say online, but it's about reputation. So you do everything good, and then you do one little thing bad, and then you're remembered for that one bad thing. Right. And it's very true. Now, here in the case of Salesforce, everyone's remembering Slack. That was acquired in 2021 for $27 billion. Absolutely horrible acquisition. I can't defend it. I'm going to try to defend it a little bit by saying that I understand why they were in a rush. I don't agree with it. And I didn't agree with it then. I don't agree with it now. I didn't agree with it back in 2022 when I was originally buying Salesforce. But I can't look at that and then judge their entirety, right? Their entire history of mergers and acquisitions. Even recently with Spiff, I think that's a good acquisition. I think they paid an okay price for that. And usually with Salesforce, and this was part of the original 2022 thesis that actually is public on YouTube, they tend to have a good ability to land and expand at every organization. So when they purchase an asset or a business, they can grab that software and they can deploy it and try to expand it in other customers that have a relationship with some of their other products. So that's the land and expand method. So typically over time, you can see that customers will tend to increase the relationship with Salesforce, not decrease it, if they already have a product with Salesforce. And the likelihood starts to increase actually the more they use Salesforce, or the more products they already use with Salesforce. They're more likely to then maybe switch over from, let's say, 5 products to 6 products, and on and on and on. And then, of course, when you have all these, let's call products that your organization is using, many of these are quite sticky, and people don't realize that. I think that SaaS-based businesses, especially ones like Salesforce, are quite easy to model out because the cash flows are a little bit more predictable and smoothed out. So when you're looking at the earnings, there is one caveat that we want to be careful of is, of course, stock-based compensation. They have their adjusted earnings figures and then their GAAP earnings figures. The GAAP earnings figures are less impressive, but if you listen to management commentary, they're really trying to taper down that SBC over time. So in conclusion, and I want to make sure we're going to be good on time. So let me quickly check how much time I gave myself for Salesforce. I gave myself 20 minutes.
Yep.
So, or no, I gave myself 30 minutes. So we have plenty of time. In conclusion, I think that Salesforce is a good, decent buy right here. Of course, it rallied on Monday. Sorry, not Monday, but Friday. And, it's not as good as it was precisely at like $217 as I think where it got to. But it's better than it was before. And honestly, based off of what they could probably eke out in margin expansion, forward growth, I think that it's still quite fair value. Now, I want to be also like a counterpoint to myself. And I want to kind of balance it out by saying, you look at your alternatives, though. There are other businesses trading at a similar multiple, actually currently growing faster on the top line and the bottom line, such as Meta, Alphabet. So, kind of do that for yourself as maybe a comparative analysis. I have plenty of Meta, and I've actually thought about adding more Alphabet yet again, because even though Alphabet looks like it's run up, it's really grown quickly into its valuation, and there's still so much going for Alphabet, even though it has bad management. But yeah, I'll leave the floor. What do you think, Bacon?
What about Salesforce in particular,
Yeah,
or
yeah.
just broader landscape? I mean, I it's against. I'm diversifying myself and my own strategies here, because I generally try to avoid things that are more flashy, cool, and perceived as expensive. Now, some people would say, "Oh, it's trailing. That's clownery." But for price to earnings, this thing isn't that cheap, is it? Would you say?
No, no, it's not nowhere near as cheap as 2022, but people can't expect
Yeah.
2022 prices to just happen all the time. That's a rarity.
Yep. So,
Um, yeah,
modest percentage for me. We'll all point and laugh when this thing runs, and laugh at me for being under allocated.
yeah,
And if it goes down violently, everyone will get the point and laugh at me the other way.
yeah.
So either way, humor is abundant and everywhere.
Yeah, like waiting for in general for I guess the whole market, waiting for like the next 2022 or waiting for the next March 2020 usually is not fruitful, just because it's unknowable.
Yeah.
And even then, like the valley might not be as low as it once was. So like, as an example, let's say we have a bull run for 5-6 years and then some bear market occurs. That bottom of the bear market may still be a higher bottom than where we are today, as an example, is what I'm trying to get at, if you understand my point. So like Salesforce was very difficult for a lot of people to evaluate, let's say the last decade, so like before 2020, because it wasn't producing tons of cash flow, it wasn't producing tons of earnings, it was all high revenue growth, and then you had to do some figure about the forward. And I think that's really abused by people, because there were things that you could kind of look at the financials and kind of back them out and see that they had the capability to be profitable, which is actually, if you go back to 2022 pitch on Salesforce, that was like the pitch. That's what I was trying to say. It's like Salesforce at a moment's notice can actually just turn on the spigot, and it takes a little bit of like tweaking or looking through the details of the financial statements to figure that out, because not all software businesses are created equal. There are software businesses that have not actually achieved that ability, right? They haven't gotten to that scale where that's possible. And so retail investors take that rule of like, revenue growth is good, and then they start applying that, and then they buy and buy and buy, a bunch of companies that are trash and will never be profitable. And so they don't even know that they're doing that. They just see a business that they're buying and they think, okay, there's like 40% revenue growth per year. Eventually they're going to be profitable. Maybe not. It's like not so simple. So there was a question I saw. It was kind of interesting. It was, do companies like Snowflake and Datadog directly compete against Salesforce? In some businesses, in some products. Snowflake more so competes against Databricks, and for my knowledge, now the hyperscalers are all competing against Snowflake and Databricks. And so it ends up being that you had like a Trojan horse of sorts, where the hyperscalers allowed companies like Snowflake and Databricks to build upon them so that they could offer these products and services to their customers and make their platforms really good, but then kind of later down the line create their own solutions that integrate better with their cloud service. And now we're starting to see even the likes of Databricks getting challenged by products from Microsoft and AWS, et cetera, and on and on. So I wouldn't feel entirely comfortable owning those, but yeah. Talk about Starbucks. I knew it. Here he is. Hello, Ryan. I actually mentioned you in passing regarding Starbucks. So yeah, Starbucks, the triple cross. Yes, we already did the portfolio update, but yes, the triple cross. So yeah, I think with Salesforce, I don't think there's much more to say. I mean, it was a good buy. It's a good company. Think of alternatives that may be there. Are there better buys? Probably. Is it the worst buy? Definitely not. Definitely not. In fact, I bought more, but we'll see how that pans out. And I would like to buy more. Technically, it's a dividend growth company now, so all those dividend growth investors are, plowing through. So No, Ryan, I actually just spoke about the blunder I did in the club about, you may not know this either. So I didn't know he bought it not too long ago. And of course, JC will brag about buying Salesforce, even though, he wasn't there buying it when it was like an insane value. He was one of the people that were scared, if anything. And if I had known he had bought it, I wouldn't have bought. I bought because I bought a not infinitesimally small chunk right before earnings, and those I'm still down like 15% on that tranche of purchasing. So talk about we cannot, but you know what they are, or you can at least ask us in the club, but we cannot talk about that. All right, we can talk about these because there's going to be like a section of this live stream where we're going to talk about boring winning. I think we can actually accelerate the timetable because I don't think I'm going to talk 10 minutes more about Salesforce. I think we've said everything that has to be said about Salesforce.
Yeah.
So, okay, losers of the AI race. There's a lot to talk about. I think one of them that I want to talk about with you, Bacon. Let me just change real quick the I'm back here just editing the timestamps at the bottom. But I want to talk about DELL. Did you get a chance to look at DELL?
I just only saw that the price movement was violent, and thought to myself it was funny how a lot of people were focused on that and Vertiv, I believe it was VRT, or was it something else? One of the other companies that like are the quote unquote picks and shovels to AI, so to speak.
Yeah, so that's partially why I took advantage and added to Vertiv under the $100 mark. So DELL reported earnings, and it turns out that their incremental growth is leading to zero incremental growth in margins whatsoever. So as in like margins are actually falling, and the profits that they're making are not growing in that segment, which means that they're giving up on something which probably is price on said product on the servers. So that made everything fall that related to that, the hardware like Vertiv, etc. And this brought into question about, okay, is the AI infrastructure theme dead? And I don't think so. I think it's just what we're looking at is DELL is a bad player, and people forgot that. So let's kind of talk about the differences, right? So, and I'm going from a layman. So the point where you're looking at SMCI and DELL, you got to understand what the differences are. And again, layman. So I just want to say that first. For my knowledge, SMCI does a lot more customized products. And so when the customer comes to SMCI, they can get a lot more dynamic changes on the fly, where DELL does more like mass array of one product. And maybe in the future, they kind of fix this and they can get to a point where they can deploy much more custom high-end products, servers, if we're talking specifics. And the same thing happens with HQ. It's HPQ. So let me put up DELL's price so I can show everyone what happened. So it fell 17.87%. And also what's not shown here is it fell 5% on Thursday. So when this happened, there was a little bit of a calamity moment where we discussed as a club, like, okay, what's happening? Is this an opportunity for Vertiv? Is this a problem for Vertiv? And then a lot of the members who are a lot more knowledgeable about this space, about what DELL is doing, and then what Vertiv is, and what HPQ is doing, and what SMCI is doing. The conclusion that I'm just passing on is basically, well, no, DELL is actually just a poor player within the space. And so the fact that they're struggling isn't really telling us, it's not indicative really if the others are going to be struggling. It's just that perhaps DELL is the worst player. So the analogy I got is that business is booming so much in this space that DELL is getting the crumbs that are falling off the plate. So if if you're the let's say the marginally worst player and the other better players can't get enough demand, then you'll have plenty of business. This is similar to like a Samsung foundry, thesis, because you're the worst between Intel and TSM. But if TSM is booked and then Intel is booked, you'll get some business, or maybe you can compete maybe against Intel for pricing. And then the Intel thesis for their foundry business is, of course, going to be, well, you can be number 2, which means there's plenty of demand for TSM to fill up, and then you can take whatever's left, which is still okay, right? If that's a more perpetual state. I don't know if that is true in the case of Dell. If it is a perpetual state, it may or may not be. So is the AI investment a bubble? I'll actually leave that to Bacon. What do you think?
Some parts yes, some parts no. That's such a cop-out answer, but nuance matters and details matter. Anecdotally, for frame of reference, we recall people expressing interest in utility companies when it comes to power and energy. Most of the time, most people don't care about those as like from a shareholder perspective. Maybe bonds, maybe preferreds, but generally speaking, not equity because heavily regulated.
Yeah.
But everybody thinks, oh, AI, and then they think, oh, the power consumption demand for this therefore means that, and no, because the structural regulatory concerns, not so much. There's better ways to operate. So maybe have those players ran up perhaps a little too unreasonably. Maybe I don't know, but that's like a random example that I think is not necessarily frothy, but things that I think most of us can like look at and reason appropriately. What say you?
Yeah, no, I think like you look at Constellation Energy, Vistra Energy, they've run up tremendously, and I mean, you're that's one way of playing the lack of energy. But I think that on the fringes, there's going to be a lot of players that are benefiting from this boom that maybe shouldn't be benefiting in the longer term. That's it. Yeah, I agree. I view that, though, at the end of the day, there are some players kind of shifting through that noise that actually are having something revolutionary. Now, in spite of everything that I've kind of been fearful of with NVIDIA, NVIDIA has proven that its business is growing, but I'm still fearful about the longer term prospects of its business in light of its largest customers all developing their own in-house silicon, which I think is going to be more part of the future going forward than today. All right. So, like, if that is the case, I don't think NVIDIA is anywhere priced for that. And so it's more of a hot potato game. Who's going to get out first? Are you going to get out in time before the others realize the same thing? Because right now, that's I love this part that actually Andrew said in the last live stream, which was the market tends to grab the current state of affairs and then perpetuate that existence way out into the future beyond maybe where that state continues. And it happens again and 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 again on throughout time, because you can't say that it was that no one was saying that the work from home play was not going to eventually die out. We were going to revert to maybe some sort of hybrid or mean reversion, because I think a lot of people are saying there was going to be a hybrid. Like at that, even back then, a lot of people said, I think about productivity levels are probably going to die out, and we're eventually going to see that. And everyone called those people stupid. Not everyone. I don't want to generalize too much, but there are a lot of voices that said that was stupid, and the market didn't really show that or price that in at that time. Like you had Zoom constantly making new all-time highs in 2020, 2021. And then suddenly, I mean, I don't know where Zoom is today. Let me actually pull that up. I believe it is it ZM? Yeah, Zoom Video Communications. I mean, this thing's been right. So this is like the part of the market where it perpetuates the state of reality out into the future. And then so if you're an investor way back here, you might be thinking that too. And then you're playing or you might be thinking it's going to come to an end, or there's going to be some sort of hybridization, or you know, if you're really bearish, reversion to the mean, which is actually kind of what we're seeing, as a lot of companies are saying now, 4 days you work from the office, on and on. But you know, you're playing that game of hot potato. So it could be, and I don't know, and it could be I'm wrong, but it could be that that's the same thing here, right? That we're just in the Zoom communications 2021 era, where Nvidia is going to keep making all-time highs, and it could go on for 3-4 years more, because for the time being, all of the LLMs that are being trained on their silicon, and a lot of the other hyperscalers, maybe, you know, going to specific names, Microsoft, because Meta is the one who's, I guess, the most aggressive, shifting to their own silicon. You have Amazon that's also trying to, but also still catching up and using NVIDIA's for the time being. It's really about a question, if you kind of know when that change is going to really start happening more aggressively, then you're going to start to see those orders start to flow down. And the moment that happens, I don't think this is priced for that. I think this company, what you're pricing in for NVIDIA, buying it now, this is the new perpetual state of reality, and it's going to be out into the future. And I think that's going to happen, you know, again and again and again for all these companies. Because, and again, people might say that, oh, that's silly, because you have to be betting that. If you are buying NVIDIA, you have to be believing that. There's no way. If you don't think that, then you're then telling me I'm playing the game of hot potato, and I'm going to sell it before everyone else realizes the thing that I also think is going to happen. Okay, so someone at me, yeah, who added me?
That was one of the group DMs.
Oh, okay, I see.
Yeah.
It was Andrew.
Mhm.
All right, bro, Jeremy showed the videos a low P, so it must be a buy. Buy it. Buy it. Easy buy. So, yeah, that's one example, but I don't think Nvidia is an AI loser. You know who is an AI loser?
C3 AI.
No.
No, UiPath.
Oh, we have to talk about this one. So Kathy Wood, who you see her in the thumbnail because she's obviously Bacon is Kathy Wood. If you guys didn't know that, when he goes on camera for, you know, the media, he puts on some makeup, so he just doesn't look like he looks now. Makeup does crazy things, makeup and lighting, and then also he's a trained vocalist, so he also can change his voice. Anyways. So Kathy Wood, she buys UiPath, and actually, I got to ask you, you familiar with what happened? I think you are.
Ish. This thing got smoked. Yeah, it got smoked.
Yeah, so Kathy Wood, in her infinite wisdom, bought this, and let me remind everyone, she sold NVIDIA, and she says NVIDIA, the biggest cope ever, right? The biggest cope I've ever seen. She sold NVIDIA pretty much like over here, and NVIDIA does this, right? So she copes super hard and says, I'll buy all these other stocks that are AI, and like Tesla. She says Tesla is the biggest AI company in the world. Okay. Because even now, I would agree that, you know, NVIDIA currently is the picks and shovels of AI, or at least one of the picks and shovels of AI. And then she's buying these companies like UiPath, which to my knowledge, UiPath creates they create like automated processes for different business functions for a company. That I don't know much about UiPath, but it doesn't seem like they're on the actual cutting edge of artificial intelligence. I also don't know how much she bought of this company. I did. Oh, you know what? There is something I also want to bring up about her. This tweet. Oh my gosh, it's such a clownish tweet. It's really bad.
Bring it up. While you're searching for it, consider liking, comment, and subscribing.
Yes. Thank you.
Yeah.
Comment, like, comment, subscribe.
Yeah. Notification bell icon.
Notification. Oh, I forgot. I completely forgot there's a notification bell icon. Wait, where is Kathy Wood tweet? It's oh. Okay, so like, what the heck, man? This is real. This is so bad.
Does she think that like 2020s means roaring 20s, therefore 2030 Great Depression type thing? Like,
Yeah, so I tweeted this out. I want to know who takes you seriously, so I don't take them seriously. Like I'm very serious about that comment. If you take Kathy Wood seriously, I do not take you seriously. And it's funny that all the people that I don't take seriously, I find out also take Kathy Wood seriously. So I think it checks out. I'm pretty consistent with that. Everyone that I take seriously does not think she's, anything. All the people I don't take seriously and have lower, expectations for, all take her seriously. So I'll read it out loud. In our view, the search for cash and safety in equity markets today is as intense as during the Great Depression in the early 1930s. When fear dissipated, the market broadened out and reward risk taking once again. I have no idea where she's been. So that's like, I mean, maybe you're right, Bacon. Maybe that's actually how she was thinking about this. She was like, we are in the 2020s. Therefore, it's reminding me of the Great Depression because it's close to the Great Depression. Because even though it would be the Roaring 20s, but yeah, I think she's probably referring to the amount of cash that's in money markets, but I'm pretty sure the appetite for risk taking has already been rewarded. It's just you haven't been rewarded all too much. Yeah, you've had permanent capital destruction, right? So what is my Bitcoin allocation? Still 0, and I don't need it. Like, why would I bother with that? I was gonna say something mean about Bitcoin. frisky version of me. All right. She's been rewarded with management fees. That is, oh yeah, actually,
bingo.
you're right. Oh, I forgot about this. No, I'll be fine. Trust me. I don't need peasant coin. Sorry, I said it.
You're not sorry.
All right. That's not true, Fabio. I don't take Kathy Wood seriously. I don't know what that's referring to. Thoughts on Shop? I like Shopify, but it's been a while since I actually delved into their numbers. There's 2 businesses within that space that I like. One of them is more fintechy than the other. But the problem with Shopify is, well, for one, I saw that their subscription revenue was sort of tapering off. I got to dig a little bit deeper how much it's tapering off and how important that is. But I guess a lot of the growth vectors for Shopify have already been somewhat explored. But I'd have to look at it more to give you a better opinion, because right now all I can say is in the past I thought that Shopify was a good business, but I don't know about right now. I like Mercado Libre more. Ticker symbol MELI, MELY, MELI. Okay, so your entire net worth will be worth 0.00 Bitcoin by the time you retire. Sure. Have fun. I wish the best for you in owning Bitcoin. What about John Deere? Also like it. I guess this is referring to I will lose my entire net worth. What happened to SQ? I think there was investigations undergoing for their product being used for crime. Am I correct? Cash App? Yeah.
Possibly.
Yeah. Last I checked, Shop could grow EBIT at 20% per year and have an exit multiple of 20 EV to EBIT, 0% share price growth.
Ouch.
Okay, so yeah.
Oh, Andrew.
Thoughts on MongoDB?
Andrew went for a 4-year analysis. Interesting.
I don't like it. like I said, there's some SaaS businesses out there that I could get behind, and many that I couldn't. Many that I don't think will have the same capability of scaling. Like there's plenty of sexy SaaS that was proven to be far less sexy in terms of how much profits they could provide at the end of the day. You know, I'm thinking of like Alteryx. I'm thinking of Splunk switched to a SaaS-based model from license-based model. Yeah, but Alteryx, Splunk, Blackline, what was that other one? Elastic. There's tons. You threw a rock. Oh, there's some lesser known ones like Health Catalyst, Domo, bunch of software or SaaS-based businesses that really they provided maybe value to the customer, but there was not a way them to provide value to shareholders. This. So the next topic that we wanted to discuss is going to be the fashion businesses. We got CROX here. I'm going to let you start with CROX. Thoughts on CROX right now?
Right now, I like it as a longer term thing. Full and fair disclosure, my cost basis is much lower than where it is right now. As such, it has grown into a considerable percentage of my port. So, if or when we get a bad quarter, I wouldn't be shocked if there's a disappointing Q3 or Q4. Feel free to point and laugh at me. Uh, but longer term, though, I think it should hold up all right. Maybe this is copium, but you know, would I necessarily put in more money, my own money, where it is right now? Probably not. I think you're expecting modest growth from the core business in Gibbets, and you're expecting Hey Dude to do really well for this to even be worth your time. Probably. That being said, though, I wouldn't be surprised if, given a long enough time frame, it works out and Hey Dude improves, bolsters the business, and they continue their merry way with the modest dividend and some buybacks. And then I figured out where to go from there.
Are they doing? They're not doing a dividend yet, though, right?
I don't think so.
They
If I
could,
recall correctly,
if
yeah,
they
they
wanted to.
could if they wanted to, but like I don't want them to.
Well,
And the
I see.
buyback is modest right now.
No, I think the buyback is probably was and still remains the most effective form to return capital right now because it's still fairly cheap, especially if, hey, dude, they can correct the supply chain by Q4. That's been the point I keep repeating. And I think, yeah, you're definitely in agreement with that one. And I think that, you know, lucky for you, Bacon, or not lucky for you, good for you, because if that occurs, you're definitely going to be a very happy camper because your portfolio is going to be hitting constantly new all-time highs. Do you have a price? I'm actually curious. Do you have a price where you're looking to exit if we reach it in the nearer term?
Nearer term,
Yeah.
if it violently runs up to around like 200, just because behind the scenes we have memed and joked, you know, this thing is 200 a share, then yeah, I probably would consider either trimming or doing something. Again, just speaking like, you know, very very short term, this thing runs up for really weird or not easy to understand reasons as to why you'd have like a violent run up, but that's only just because of the percentage of active portfolio, like the allocation and what it's grown into. That's the only reason as to why. And you know, we can laugh at me for doing that. Dex, no, I have not sold covered calls on CROX. I just bought the commons and let it do what it does. So.
Yeah, with this one, I would not sell covered calls because it's one that could definitely move on positive sentiment regarding Hey Dude, because that was the original reason why we saw this opportunity was the Hey Dude acquisition that presented this to us. I would advise greatly against that. I have, for full disclosure, because I'll say it, because we're in the topic of that, I have puts that I sold on CROX. So I'm long the commons, and then I also sold puts at various price points to then also collect premium. But I'm quite long. I'm decently long CROX. So yeah, don't do a CROXy. You'll max on CROX. That'd be silly. At that point, I mean, like right now, if we see things get better by Q4, fairly confident we'd see $200 stock price. If they continue to buy back shares at current earnings yield, I think that's also a really good use of capital. If at some point I would say if the multiple starts to get towards 20 again, I would prefer them to stop doing buybacks and then focus on dividends, maybe even considering special dividends. So yeah, probably buying puts. No buying puts. Well, there are some puts that we have. We might also, we can talk about that too.
You sure?
Yeah, of course we can talk about RILY.
Oh no. I
Yeah.
apologize for being public. I really apologize.
So we'll save that for the end because
Okay.
I want to talk about the other fashion businesses, but definitely we're going to talk about RILY. So the part of the I guess what's exciting right now about some fashion brands, we're seeing a pullback. I don't know if you saw that LVMH is going through also a pullback.
Really?
And then we also, yes. And then we have Capri Holdings pulling back too, with the acquisition supposedly not maybe going through. So that's what the market's pricing in. So if it does go through, your returns right now are going to be pretty insane because you have that merger arb, which isn't true arb, but merger arb that is there. I just have a problem with calling it arb because it's not true arb. You are taking on the risk. Now, the question is, do you want to own Capri Holdings if the merger doesn't go through? Now, currently, right now, it's selling for, oh, no, wrong. This is not it. This is not it. Ignore it.
There you go.
So it's selling for less than the price was, well, slightly less before the merger was announced. And oh, sorry, Michael Anthony, we are going to talk about this. I'm going to star your comment. I forgot that you can do that here, so I can star comments if I see a question that I'll answer. I think companies do buyback is a waste of money. I do not think so. I think that it can be, but it depends. I think if it's done right, it's way better than dividends, infinitely better than dividends. But if done poorly, it's like burning money. Yes.
And you'd rather get the dividend.
Yes. Yeah, exactly. So Capri Holdings. With Capri, do you want to own this business if the merger doesn't go through? That's like the question you should ask yourself. You should analyze this business independent of the merger, and you have that luxury right now, pun intended. Because now you can kind of say, okay, what do I have here? What's the current price? It's basically pricing in that it won't go through. And then your optionality is that it does go through. And then you get a buyout at, I think it's like $55 a share, which would be quite a bit higher. Yeah, you wouldn't be crying if you had if you look at it from an annualized rate of return. And honestly, I mean, if you're trying to get long-term cap gains on this for tax purposes, not financial advice, but you probably would want to buy this soon or make that decision soon, because if the decision goes through, I can't imagine it's going to take that long. And then you're kind of playing with fire, because if you bought it today, you have until June 2nd. Well, no, it's too late. That'd be Monday. So June 3rd, to be safe, June 3rd of next year for it to qualify as long-term capital gains. So, you don't have much time. And I kind of think that if it is going to go through, it's going to go through before that, unfortunately. So you may be already too late for that to happen, but who knows? Capri is your Activision moment. This is your financial advice. Go buy ASAP. No. And recall. So Activision, in Capital Mindset, we bought Activision before the announcement. It was actually the best kind of decision, in the sense that I wanted to own the business independent of Microsoft coming in and buying. It was, if you guys recall, you might have the let's say memory on this. There was a lot of allegations regarding the Activision Blizzard, management and treating employees, etc. There was a lot of drama going on at the business, and that was perpetuating the stock down. I even created what I thought was a funny meme using Call of Duty scene You know, how analysts were downgrading and all that. And, you know, we made a big video about it, why we were buying. So, and then, you know, I think it was like not too long after Microsoft announced they wanted to buy it at $95 a share. We got a big spike in the price. And then the rest is history. So, okay. We're getting evidence for the hit piece. Hey, Dan, how you doing?
Hi, Dan.
So, thought I'd interrupt late.
No, beautiful. You're more than welcome anytime.
Talking about fashion companies, Dan.
I know I was waiting for that. Totally.
He was like, I want to come in when they talk about fashion companies. Well, you're going to like because I say tongue in cheek about boring businesses, because I did want to highlight there's a lot of boring businesses that seem to be kind of selling off right now, and they could be presenting opportunities. You have a winner, boring business, Tractor Supply, which I'm going to just shout out right now. Dan over here, very bullish Tractor Supply, and fought everyone on it. And he's up almost 100% right now.
I keep asking Fabio, I'm like, do I have to be nice to these people? He's like, be nice.
Yeah, be nice. Be nice. It's better.
I don't defend Tractor Supply. Just like, you're all wrong. Anybody that hates it. So it's cool. There's not an argument. It's just they've been wrong perpetually for a while. So
what is it?
Out of curiosity, Dan, just double checking with Tractor Supply, what Ford PE did you roughly buy it at?
oh, Jesus. The first time?
Yes.
Dude, I don't remember, man. It was
Oh, okay, all right. Most recently, I suppose then.
Most recently I bought it when it dipped to like 200. I was buying it like 160s, 190. Can I just waited a year or so, and then it came back to 200 and bought a little more. Oh.
Well, I have a question for you. So you see LVMH is pulling back slightly, guys.
I heard you say that, and I was like, ooh, I was looking at it when you said that. It's like, oh,
you know, it's a slight pullback, 15%. So it's 15% cheaper than it was before. And honestly,
see, this is great because there's this perception right now. I've watched enough people talk online and some of the analysts. The perception right now is anything related to retail, right, is going to do poorly because people are pulling back on spending, economic concerns, inflation, whatever. So they're like everything's getting hit, which is a great time to look at like what are the better companies.
Yes. And I'm sympathetic to the Ulta story, even though I don't think their recent quarter was good. But you also get Sephora in here, which high-end makeup. But yeah, I think Ulta and Sephora will both do really well. I think those are going to be a lot more insulated from, you know, drawback in consumer spending, because, you know, not to say girls will spend money on makeup throughout all environments, but girls will spend money on makeup through all environments. There, I'm saying it. So sorry, not sorry. So, yeah, Louis Vuitton selling off. Well, we're about to get into the boring segment in 1 minute, so let's go ahead and get started with that. So, boring business segment. I mean, there's a lot we can get into here. There's Tractor Supply. There's John Deere that's selling off. There's Home Depot's pulling back a little bit. So you have a bunch of boring businesses that done really well. I don't think Tractor Supply is doing a pullback right now, right?
No, I don't think so.
Tractor Supply is like, I don't care. Pullback? What pullback?
What's a pullback?
What pullback? What are you guys talking about? Oh, you're pulling back. I'm not.
Do I have to like? I almost feel like I have to give my speech to capital mindset people. It's like you have to look at retail companies differently than tech companies, and they always go, of course, but then they'll tell you something that's a tech company valuation when they talk about like Tractor Supply or Dick's or something like that. They're like, oh, it's growing single digit growth. I'm like, well, that's good. They got to keep their debt low. Debt is what kills these companies. They don't have the cash flows to rapidly grow and pay off debt like a tech company. So solid plans, good management, slow and steady growth. Like if you look at a lot of retail companies, what kills them? It's debt. It's always debt because they take on debt to do a remodel, or some new manager wants to do something new with the stores, and then they can never recover from that debt, even though the business seems to be going along all right. it just kills them. Toys R Us, Sears, it's always like the same story.
Yeah, no. And you're including, like, you're talking about leases as well, right?
Mm-hmm.
Is negative 24 EV to EBITDA a good multiple?
Negative what? I think I know where he's going with this.
I'm assuming he's saying the enterprise value is negative.
I know where he's going with this. I'm pretty
I mean,
confident.
it doesn't sound great, right?
He's talking about a company that I do not want to talk about publicly. But
Thank you for that.
for good reasons, I don't want to talk about that company publicly. But yeah, is Tractor Supply the new Musa? I just don't care. I don't think it's anywhere. It's not like the same story as Musa, where it's
No.
like a buyback machine.
No, it's not a buyback story.
So
It's a growing one.
Tractor Supply has plenty of growth in the US. It's not the same dilemma that Home Depot and Ulta face at all.
is Home
We're not even
Depot
close to that
facing?
point.
Can you help me understanding Home Depot right now? Because there's a lot. So I want to own Home Depot, but as a young gentleman or younger gentleman, I'm coming in late to the game. Like, I wish I was in that way. I wish I was like paying attention to Home Depot more back in the day, and I was not. But obviously,
Like,
let
should
me
you,
make
as what,
here.
like a mid-20s person, buy Home Depot?
Yes, that's what I'm asking.
I mean,
because right now
you don't have index. If you were indexing, like if you had like a core index position, I'd say absolutely not. So if someone out there, if you had like a big S&P holding, I don't see why you would hold Home Depot separately, like at all. I mean, now you're asking, like, will they see an appreciable gain due to the expected increases in home sales, right, in the next, like, say, year or two? Everyone seems to keep thinking interest rates will go down. We have this huge deficit of home building. And I don't think this is the best way to play it, honestly, but
I think I will talk later though about how I am playing the potential for interest rates to remain where they're at. But you may know where I'm going with that, maybe not. But once I say it, you'll be like, it's going to be probably the most boring topic I've ever talked about on this channel. So that's the hint. But anyways, Home Depot, because what I see with Home Depot, right, is all right. They've have they mapped out the entire United States at this point?
pretty much.
So then you got buybacks.
They grow like what, 10 stores a year, maybe. Maybe that's more than they do.
So then it's probably just efficiency gains, buybacks, and Home Depot Pro. That's the growth.
Well, now they're vertically integrating with that warehouse they're trying to purchase, the company that does the wholesaling of, was it roofing materials?
Yeah.
So this is new, right? So now they're trying to get in the supplier game, maybe more, to push into professional business more, make sure they are the top dog in professional business, which I don't think they have anything to fear from Lowe's. So I that's kind of why I sold Lowe's. I didn't buy what management at Lowe's was doing. I don't think there's a great story at Lowe's, honestly.
And Lowe's was the Bill Ackman play, but
yeah,
I think Home Depot's a superior business versus
yes.
Lowe's. Better
the
run.
professional business is it's so much better. Like,
so okay, Home Depot. Okay, we got that out of the way. But yeah, I like the pro business a lot. It's pretty much going to be a buyback. So the reason why this was brought to mind is, like Fake Alias, he said the Musa, right? Musa, the story goes there, boring retail gas station play and buybacks all the way through. And then you see how that's done. And as they get more expensive, which they still have room to run, really real quick, talking about Musa, I think if you still hold Musa, full disclosure, I do not. But so I feel like I can come from a position, I'm not being biased here. But I think, like, if you still hold Musa, there's still an argument to be made that there's probably going to be a little bit more room to run. You could argue that they could eventually see a multiple right now where Casey's is at. Maybe not. So that would imply a little bit more. But you know, right now it's definitely not the same opportunity as it once was, and the buyback yield is not going to be as lucrative now because just the multiples expanded. So you've benefited from earnings growth plus multiple expansion, and if you've been holding it through this time, congratulations, really happy for you. So I'm out of the position, but
I had a great buyback company and I got scared out of it and I hate it so much.
I'm scared that somehow people are finding out what Andrew's talking about.
I wouldn't be surprised, but anyways.
Wait, are you talking about pizza? Are you talking about pizza, Papa John's?
I don't think so.
You talking about Shaquille O'Neal? Oh wow, wait, because okay, we were asked, so I'll bring up this
Oh,
comment since
goodness.
we're looking at it now. Michael Anthony asked us, pizza, will it stop going down? I have no idea. The first time looking at this, but
Holy crap.
they were a beneficiary of COVID, and I'll just say it this way: they are no Domino's. They are not Domino's. Papa John's.
Are they franchises like Domino? I don't know anything about Papa John's.
Yes.
Okay.
Yeah, they're all franchises. They're franchises. From my understanding, though, like there's been a lot. So Domino's has Domino's has much better app than Papa John's, and there's also been some efficiency gains on the ingredients that Domino's has undergone that Papa John's has yet to undergo. So, like, from my understanding, Domino's was able to expand more profitably throughout the United States than than Papa John's. And during COVID, Papa John's basically, remember that example that I gave, where it's like the whole pie is growing, so everyone's just benefiting. That's basically what happened to Papa John's. So you're looking at like, can they turn this ship around? Story. It's a turnaround story. In theory, it should be a business that has a lot of potential, in theory. But, you know, at the same time, guys, Wendy's has the same potential as McDonald's. Is it going to happen? Probably not. Very likely not. There's only one McDonald's. Well, that's not also true, because like the business model for McDonald's, like what McDonald's has done with like owning the real estate, et cetera, that was more unique, because a lot of franchise companies, they don't still do that. There are a lot that do, but there's also a lot that don't. So DPZ is pretty OP.
I remember like I've eaten at like 3 Papa John's, I think, ever, and it's always the same story. Like when they first open them, quality's amazing. Then you go back like a year later and like half the cheese is missing on your pizza. It's like they crush the middle of the box. Like I don't think their quality controls are really that well executed that I've seen. And I've seen the reviews online a little bit too. But
Yeah.
I don't know why you'd buy this. Like this is like what, the third pizza player in the US?
I mean, are they behind Pizza Hut?
Good question. Not sure.
I mean, to me, they're on par with Pizza Hut, but Pizza Hut's got a dining experience that I think people still enjoy. So, like Papa John's is straight head to head with Domino's, like no difference, just takeout. But
yeah, well, it'd be something to look into. I'll look into this. I mean,
this is like Under Armour, right? You got one of the second, third players that no one really liked that much getting obliterated, and you're like, it can't keep going down, but like they are.
All right, Alaka.
Good old Alaka. Oh yes, darn it, Alaka. I was gonna try and like talk to people behind the scenes, but since it's out here, speaking of boring businesses that may quietly do well and have growing opportunities here in the States, I present to you Ollie's Bargain Outlet Holdings, a discount retailer. Their shtick is they specialize in liquidations and overstock. So they acquire overstock goods, and they obviously sell it at a discount, pass on savings to customers. But what they also do from an expansion standpoint is they favor going out and buying land that used to house distressed retailers. So as an example, I think the stat was like about 20% of what used to be Toys R Us's now housed in Ollie's Bargain Outlet. This one is one that I wanted to quietly keep on the radar, because right now it seems from a forward basis, last I saw was like 25, 26 price to earnings forward. But if this thing gets punished unfairly, this thing might be all right, especially if the narrative is really true, where like the consumer trades down and stays trading down for a while and rejects higher prices, just because you have better opportunities, better jump balls for Ollie to seize inventory. And when it comes to their expansion, right now they're concentrated in the east and southeast of America, but they're slowly pushing towards the Midwest. They're right now putting on the finishing touches on a Illinois distribution center. So it seems like they're positioning themselves for viable markets that some people would scoff at and say flyover states. But I think it's safe to say that there should be enough, again, metaphorical jump balls for them to expand in a reasonable way. So that is my sloppy pitch and my very early dig into this little company.
Them versus Dollar General, like, what is the difference? Help me understand. Did they just do overstocked items?
Yeah, they're purely that. Yeah, that's generally, as far as what I can tell. If that's not all that they do, then that's majority of it. I like the balance sheet. More current assets than total liabilities, last I saw.
You're just describing their business as like cyclical almost, based on other people doing poorly.
Yeah.
So they can go take scalps, basically.
I like to think of this as like, imagine this as if Big Lots had a better price chart.
Oh yeah, this is not. Yeah. I always thought Ollie's was like a tiny version of Dollar General. That's not at all what it is.
No, it's more like a better price chart Big Lots.
I've been to Ollie's and I'm like, do they just go to Amazon and say, just send us all your garbage that you don't sell? Just send us it in big crates. Because it's the most random stuff you can imagine on their floor. I'm like, maybe it works. So.
Yeah, they lay out their segments with food, candy, and apparently that's what they get their most repeat stuff with low margins naturally. But it's a draw, and where there's a draw, there's enough stuff in the air.
So 2020, they scooped up a bunch of stuff during the lockdown from businesses that couldn't survive being shut down. It looks
almost
like,
certainly.
If I had to guess, looking at the chart,
almost certainly.
It's interesting to think about that for the future. Then,
yeah.
This is just something to put in your pocket, almost, right? Like,
yep.
Yeah, Jonathan, like I said, worth a radar, maybe.
Go back in the video. There's a whole section. If you go to the timestamps in the description, you can just start there. We talk about that pretty early on. So Dollar General, because I'm seeing some Dollar General comments. Do you think they're gonna make it? You think they're gonna rise again? Oh wow! Wait! What the heck happened here? They like fell the other day to 128, and then just like, the heck? What the heck is this?
I think these stores are like a plague, dude. I freaking hate all these dollar stores when I see them. Can't stand it. They can all go out of business for all I care. So.
Yeah, they're okay. So would you rather own Target or Dollar General?
Ooh.
It's completely almost opposite ends of the spectrum.
You had to hit me with that one. I don't like Target. I don't like Target.
Walmart, fine. Walmart.
The problem with Target is like they're like, it's about the experience, right? Like they can't just keep lowering their prices to like to stay in business, because then you're just Walmart. What's the difference? Like, I don't know. I'd rather have Walmart than Dollar General any day. So
Well, Andrew now thinks that I was way too early on my mistake with Dollar General, but he's saying basic 5 bag 23. But now I think this may be the time for Dollar General personally. Wow, Dan hates.
oh, shut poor. Give me a break.
I
I've done
mean,
well enough that I don't have to go to Dollar Generals or Dollar Trees.
but isn't a Dollar General more expensive?
I mean, probably. It's just you get these little tiny packages. Like my wife will bring home, like the kids will get these little teeny toys, right? And it's like garbage that breaks in a week. So it's really that cheap, right? Like it was a few dollars, but it's gone so fast. So
Okay, and then Dollar General, they've done, I mean, they're going to be towards the end of their CapEx cycle of renovating a lot of the stores. There's still a lot that needs to be renovated from my understanding. So it's going to, wait, sorry. Well, we have a cult around Square, actually, funny enough. Block. We call ourselves the Blockheads. This is the Blockheads podcast. Why don't I own Square? Okay, so I think that's a fair question. I think within the fintech space, there's actually one business that I don't know why, but I'm much more interested in the at least the point of sale terminal business. You guys know which one, right?
Oh yeah, yeah.
Rhymes
It goes
with
great with
toast.
butter.
It goes great with butter.
Yeah.
Toast. I like toast. I like the business. I mean, from all the people I know that have restaurants, which is not many. I made it sound like I know tons, but they love the platform. And Square does restaurants too, but Square does a lot of other things. I think Cash App is better than Venmo. I see it used more, in fact. I also think Cash App does more than Venmo. If I were to use one and I had to use one, I'd probably use Cash App, if I'm being honest, because it does a lot more from like banking. I think they've just now, well, actually Visa came in with Visa Plus recently, by the way. Did you guys know this? That you can now, they're going to be integrating like a Zelle function, essentially.
Really?
Yeah, it's going to be a lot easier and quicker to transfer money. And then you can buy stocks, you can buy well, I don't buy crypto, but you can buy crypto if that's up your snuff. But right now I don't know. I don't feel comfortable with what's going on with the government coming in. What do you guys think?
About toast? Or
No, about Square or Block.
no. I never was interested. Sorry.
I think it's one of the more interesting fintechs. I think it's better than PayPal. I think Dan might agree because Dan loves PayPal.
I mean, if I had to buy a fintech, probably be Square.
I think the best one out of all of them, those three, is Adyen. Because Adyen is pure play, like the best part of PayPal. Adyen is only that. So you get just that. And they're the best at that. The white label product. So yeah. And Adyen's the one that's growing still really nicely, etc. If PayPal spun off Braintree, that'd be interesting. And then Stripe, when Stripe gets public, that'd be interesting. Because you have the three. They're like the three that dominate the entire market.
What about, and this is me being deliberately dumb, what about Fiserv?
No, you laugh, but Fiserv is interesting from the banking point of view, right? Because Fiserv has a lot of banking software, and that's so sticky. It, like, people just don't understand. Fiserv does not care pretty much about any, let's say, environment, like at least that part of their business, because they do have the part that they acquired from, I think it's called First Data back in the day. For those of you who've been investing for like 5+ years, you might remember First Data. But First Data Corp was acquired by Fiserv, and that's how they got Clover. And Clover as a business competes with like the terminal or POS system from Cash App. So that was like a hot growing business inside of Fiserv, but you have that legacy business inside Fiserv that really gives you stable cash flows. And if managed well, I mean, I think it's a great business. I remember Rob, the popular investor, who I criticized for his PayPal valuation, right? He sold Fiserv and he used those proceeds to buy PayPal. And that's when I reacted to his PayPal valuation. I was like, how this is garbage. Garbage in, garbage out. And that was like when PayPal was well over $100 a share. The story is played out. But yeah, he sold the good fintech and he bought the bad one. It made no sense to me. So you guys don't believe me. Actually, Fiserv changed their ticker. It used to be FISV. They simplified it to FI. I don't know why, but it's a simpler one.
Yeah.
Like, look at this. He sold it like literally around here, by the way.
Ooh.
To buy PayPal over $100 a share. I think PayPal was like 120. So PayPal fell by, I don't know when he sold PayPal, but he's been out of PayPal.
Ouch.
And then also the CROX. Now that we're talking about him, I mean CROX too. Oh my gosh, I feel bad, like, because he sold CROX before the run, and it was a big position, so he missed out on all those gains. He played with the soap. It's a shame. It's a shame.
I really don't know why you'd sell Crocs in any. I don't get it.
He's playing with the soap, trying to, get scared off, like really scared and stuff. But yeah, it's playing around with the soap too much. If he coffee canned his portfolio a bit more on some of his positions and didn't trim the flowers and instead trimmed the weeds, I think his performance would actually be a lot better. But hey, what do I know?
You can so buy winners. There you go.
Should we talk about that stuff about SoFi?
What, the behind the scenes stuff that you've hinted at?
Yeah.
If you
Well, I
want
didn't hint
to.
at. I overtly told you guys.
Yeah, true, but
I didn't hint. There was no hints.
I mean, I don't know if you're supposed to, but
yeah.
Yeah, you know what? I'm not going to do it. Yeah,
Okay.
you're right. I should not do that. It's already bad enough that I just hinted at it. It's a mystery. Don't worry about it. If SoFi longs, don't worry. If SoFi shorts, don't worry. No information. Rob sold KKR. I don't even know he owned KKR. Almost as bad as Fablio paper handing Swav. Yes.
the hell
Swav was a small position anyway, so I would have made. It would have fed me Chipotle for at least a good part of a year, though. So, okay, he hates seeing green at this point. Yeah. So for boring businesses, there's also another one that Andrew wanted us to put up. Corning.
The heck?
It's an industrial.
Ooh.
Oh wow. Well, thanks, Andrew, for telling it now. Thanks.
No, he just wants his exit liquidity.
Yeah, you could have told us October of 2023, but like, okay, thank you. No, in all seriousness.
Wait,
this is hilarious.
I know about the other Corning. Is this the
Corning,
glass
the
one?
roofing, right? Yeah, this is the glass one.
Okay. I only know the roofing one, but
how's the roofing one doing? Doing really well, I imagine.
It did really well. Had a good run.
Dude, it's cheap and has a buyback in place. STFU.
I'm trying to remember. This company sells specific types of industrial glass. Yeah, display technology.
Your iPhone has them.
Yeah, they're really like cell phones and stuff.
Yeah. Okay, they have a buyback in place. They're cheap. They're not really growing top line, I think.
Efficiency story.
Yeah.
And return to capital shareholder strategy.
Well, Dan's
phones
not
are in
gonna
a
like
weird
this
place,
one.
aren't they? Because there's nothing interesting or new about cell phones, right? You just have all these kind of suppliers, and it's just like there's nothing to get excited about, like with cell phone sales. I don't know.
Oh.
Like the days of saying, "Oh, we're going to convert people from Apple to Android," or everyone's picked their side at this point. I don't see who's switching.
Well, the one I have in front of us right now, Dan, I don't like it.
Oh, poor Dan.
See, I'm still holding my shares in the personal holdings for Lamb Weston, but you know, just boring. It's gonna chug along. It's gonna keep rallying. It's gonna keep recovering. Just every other day, going up 2-3%. Before I know it, just be like a 40% gain. No biggie.
I pick stocks for an entertainment, and this is like the most boring goddamn company you could ever imagine.
What is this
For
segment?
you.
This
As soon as I
segment
open
is
their
boring wins.
presentation, I just want to tear my skin off thinking about looking at potato sales.
So
this is what investing is, people. Potatoes.
For those who, because I've had this company on my watch list. For those of you who are just tuning in, don't know or weren't here when I had talked about this last time, I pitched this within the club as an interesting turnaround, because what essentially happened here was a mistake in their ERP systems, and it can oftentimes be the case that it's a blip and it's going to correct itself in a quarter. It could last a long time. But if you take management's word for it, this is like a 1 quarter issue. And so if the next quarter turns out it's not the case, watch out, it's going to fall. It's going to break this low probably. But, with the French fry business, a lot of their inventory won't last like all too long, at the end of the day. So it should more or less be corrected at this point.
I mean, Ozempic's just going to kill your business, so
it's
people won't
definitely
eat
not
potatoes anymore.
I mean, I know you're saying that tongue in cheek, but yeah. It is a good and boring business that exists out there, and I'm happy to hold it because I'm also trying to prove a point. And Fuhat's in there with me. It's one of the times that Fuhat and I are together in an investment. A rare moment, by the way, a very rare moment that Fuhat and I are together. We're like the meme, like the two hands coming together. Like, heck yeah, we're fighting all the haters of Lamb Wesson. Yes, Lakers in 4. And maybe it was more of a dig on the provider, which I think was SAP, than anything else. But yeah, why would that hurt them? Exactly, Alaka. There's been plenty of examples in the past. So it's really was a case where I was like, whoa, dang, look at this price. It's been on my or the share price drop. It's been on my watch list for a while. Now is the time. We built a position in the holding co behind the scenes. I'll talk about it. I already closed the position because I wanted to move the money around, but I had calls. I didn't make much nominal dollars, but a percentage, it was cool. It was like a 30% gain when all was said and done. Yeah, but I think it's gonna I have the commons now. That's all I have left, and it's just gonna tick. I think up and to the right, unless the next quarter comes and the ERP blunder is not a 1 quarter issue and it's more than that, then it's Jover. Ooh, good question. Because you know what, when you ask a question, and I'm not going to gatekeep like something I've done, but I actually sold a put, or actually a set of puts on one of them, and that's PAYC. But yeah, no, we don't look too stupid now of selling them when we did, do we? So yeah, I sold some puts expiring January 2024. Well, I'm saying this publicly because this is only updated way more frequently within the whole the club. So just to be clear, definitely never copy anything I say out here. Don't copy my positions. If you're trying to do so, you're going to blunder at it poorly as far as timing it, because you won't know if I got out of it tomorrow, because I have tomorrow's Sunday, but I have the full right to get out of that position Monday, Tuesday, on and on and on and on and on. So you got to be careful. But yeah, I have right now, I'll tell you the exact puts I have. I have the 120 strike puts expiring January 2025 on PAYC. And then here, I'll show you.
Really want theta to work for you.
Yeah. Well, if I don't own it at the end of the day, I'm not going to cry about it because I'm pretty much fully invested. So no, I'm not. I'm not trying to do the wheel deal. Definitely not. I think that's garbage. I think the wheel deal's garbage. But if I do get a sign at 120, I'm fine with holding it. And when I'm doing this kind of stuff, it's like never it's gonna be like big. Maybe it deserves its own episode where we kind of sit here and we talk about options. And I think Bacon would love to have that episode discussion because you love the more academic side of options. But
I like nerding out.
you like nerding out.
Yeah, yeah. How much I retain and how much
Bruh.
I improve by is entirely up for debate.
The CRM position is pretty much the same size as it was before, just slightly bigger. So it should be, I believe it's like off the top of my head, like 3-ish, a little over 3 now. And it was, I think, bigger in percent allocation way back when, but other things have grown a lot more, mainly Meta, and Amazon, and Netflix. So it's not Salesforce's fault. And then also Salesforce originally fell, but we added more to the position. It's just not going to be as possible as much in the future. But Cosio left, which was a big drop on Friday. Yeah, and I think that's a bad sign.
We're still on boring topics.
Oh, I did not know. Oh no.
He did.
Oh no, I fucked up.
That is hilarious.
Wait. At what price though?
I'm gonna look it
Did
up.
he recently go long? If he recently went long, guys, there's like way more room to fall.
Bail.
When did he go long?
Bail.
Wait. Andrew, you can't stop. No. Fill in the information. Fill in the blank. When did the clown go long? I must know. This is very important information.
I might know. Let me see.
Whew. No. He told us. He told us.
Okay, here we go. He has a video. I bought 13 stocks. March 12th. And it's Paycom's one of them.
No, but Andrew already told us. It was
He did? Okay.
Yeah. So he didn't buy here. He bought like some other drop.
So March. So he bought $200.
Watch him sell covered calls when this thing recovers, and like he undercuts all of his gains. Again.
He's so dumb. The selling puts is so dumb.
Okay. Well, now I feel attacked because I sold puts, Dan. Thanks.
Well, you're doing Paul's doing it saying I'm a long-term investor, and I'm doing that through this approach called selling puts. So as long as you're not doing that, I hope.
Yeah, no. He doesn't have he goes like, oh, I'm 95% cash. And
like, what's the logic? He's like a stock's like $200. He's like, oh, my modeling says it's worth like $600, but I'm gonna do selling puts till I'm gonna buy it at 140. It's like, why don't you just fucking buy the stock right now? What are you doing?
Yeah, and for me, I'm not buying the commons right now because like there's other things I want to be buying. There's other things I want to buy. So, but I model it out based off of like my cash flows. So I definitely have, and for context, like everyone sees in the club, I have the cash account now merged, and so people can see like it's worst push comes to shove, the commons could be bought at the strike of 120 for the amount that I sold the puts on. But if I don't get a sign, I couldn't care less. I'm taking the premium, going more long, basically, is all I'm doing. Take premium, go more long. My main ideas. And then if I'm doing this properly, I'm not getting a sign on some of these businesses that like, it's like, okay, I would own it. I'm not in a rush to own it, but I really want to own this other company. This is where I'm focusing my attention on. This could be like a side quest, and it's on the margins. I think like Paul, what he's doing is like, he's like, doesn't have a position. That's his idea. And then he just sells puts on it. It'd be the equivalent of like, okay, I see Meta, the opportunity of Meta. And I'm like, oh, I really want to buy Meta. I'm going to sell puts on it. Someone has to pay me to buy it. That'd be stupid.
I'm above the fray. I am the casino.
So this is a good question.
You're shitty. You're the Trump casino, apparently.
Yeah.
Go bankrupt.
So what I did it on Friday, the day of the drop. So it dropped 8.5% on the news. And so at that point, the premium started to spike. I think that Paycom is a quality business. It's a business I wouldn't mind holding, again, like a side quest of sorts. That's what I call like side positions, side quests. And then I could have done, if I had done at the money, the at the money was yielding 10% raw yield. And if you annualize that, maybe closer to the 20%. What I got was a raw 6% yield at the strike of 120, annualized closer, I mean, a little bit less than that, but closer to like 12. Let's call it maybe 10%. And then instead of 20, call it 18%, 16%. So if you do at the money, right, that's kind of like, might as well buy the stock. Might as well buy the stock. I don't know. Maybe. There's still an argument. I thought about it. But if that's like, if you already wanted to buy Paycom, I think right now the price is pretty good. At 120, I think it's really good. And then if it goes lower than that, at that point, I'd probably be making it an actual position instead of just like a side quest. It's all about what the price is.
Are we still under the boring topics? Boring company topics?
Yes. All boring companies.
What are everyone's thoughts on Monster energy drinks, beverages?
MNST. Okay, since Andrew's watching and he can listen and he can hear us, I think this is actually one of the most garbage companies he's ever like pitched.
Really?
Yeah, terrible margins, terrible growth story. Really bad allocators of capital, no growth, no international expansion. Just like dying fad, too reliant on Becky trends. Yeah, it's a terrible. Thank you, Rob. Terrible track record. Probably the one of the worst companies I've just
he's
ever
taking
laid eyes
food
on.
out of the mouth of his family investing in this company. It's over. So
It's over.
Okay.
Basically, take everything I said. It's the opposite because it's a good company. Now at the valuation, what do you think, Bacon?
Full and fair disclosure, small position. I would really like it mid 40s, but Andrew just keeps manipulating the markets. Joking, of course. But there is that interesting Dutch tender offer though, and I think there's minimal time left for people to do that. So.
Oh yeah, like the idea that I brought up, and it was my idea to tell everyone about.
I thought it was Andrew, but
no, it's totally my idea.
Okay. I don't know.
It has to be a small account. Do you mean like
fuming.
dollar amount or just the amount of shares you can get?
99 shares, so odd lots.
Okay.
I'm trying to remember from Andrew's instructions. If you want to take advantage of the arbitrage, you have to buy up to 99 shares. So for big accounts, it may not be worth it, like the effort. For small accounts, it's free money. It's free money. It expires depending on your broker around June 5th, June 6th. So yeah, you have. I said it's my chance to get out of a shitco. What do you mean?
So they're willing to buy shares up to a price of $60. Okay.
Up to a price?
Wasn't it?
Yes,
No,
it is with like 50-cent increments. Andrew is in caps lock saying, "Do not pick a tender price." That being said, though, like for where it is and a longer term hold, I think it's roughly fair-ish value, maybe. Mid 40s would be more compelling for sure.
So what someone could do, and the more explicit instructions because Andrew gave literal financial advice to people. No, I'm kidding. But you have to do it it's per account. So if you have multiple accounts of the bank, you can do it for each and every single account, up to 99 shares, which, I mean, quickly doing the math here, 99 times 51 would be $5,000. So, $5,000 per account. And then you have to communicate with your broker and then participate in the tender offer. So if you have one account, you're limited at 5,000. If you have 2 accounts, you can do 10 on and on and on and on. If you have a bunch of accounts, 5,000 per account. And then the minimum price, I believe, is $53. So you could put that basically as your bottom. So the delta between whatever price that you pay for and 53, that's your minimum guaranteed profit in doing this. A more true arbitrage that currently exists.
Why are they doing this? Do we know?
Liquidity for the co-CEO retiring.
Yes.
Why don't they just do a normal share buyback? Why are they doing it this? Is it promotional kind of like?
It's for a it's targeted in a specified period of time, which will be targeted precisely around his retirement and his liquidation.
Oh,
yeah.
So since it's like, yeah.
And if I remember correctly, I don't remember the exact details, but I think Monster also Dutched in, and this is them kind of Dutching out.
Mm-hmm.
I forget the exact mechanics of it. I'm not great with, these details, but like this type of transaction.
There's something more. If we had Andrew here, he could help us. He could guide us. Let's fucking go, Monster. There's some risk, but I'm on a Stairmaster and spelling it out at the moment. Go to Discord to check.
I mean, this is a lot of time to talk about a dead company, honestly. So
yeah, we shouldn't be talking too much about a company that's going to be dead anyways in a couple years. Let me see. He didn't say any risk. He literally said no risk. I'm looking at his pitch right up. Now, okay, so he said here, now there is no downside risk. Per Monster, if the share price falls 10% below the minimum tender offer, $47.70, they cannot cancel the entire offering. In that case, you would not lose and be able to participate in the arbitrage. Okay, basically everything I said opposite. Basically, if it falls below $47.70, which is 10% below, you would, in that case, you would lose and not be able to participate in the arbitrage. So that's your downside risk. He's like, I'm going to be back home in 10. He's going to be like, no, we got to talk about this. Let's set the record straight. He was wrong. So yeah, Monster Beverage Arbitrage currently exists, which is kind of interesting. Send me $5,000 and I'll do the trade for you. PP Coffee. Okay, so everyone here send Day Trading Mindset $5,000. Go ahead and put your Cash App.
But he's over in the EU.
Don't worry about it. We'll figure it out.
Catch me outside, bro.
Okay, so as far as a really boring business, I have one for you guys because I get asked about this one recently.
T-Mobile.
T-Mobile.
Really?
Thoughts?
But why?
It's telecom. It's the telecom that pays the lowest dividend, but it's telecom. Focus more on buybacks. And look at it. Winners keep winning.
Okay, so out of the big US players, it's probably the least awful. Like if you shoved a firearm into my face and said pick one of the telecoms, I wouldn't be happy, but
yeah, that was my reaction. I was like, there's I think there's better. I think there's better than T-Mobile, but I'll respect T-Mobile for what it is. Look at this phenomenal performance. That was phenomenal performance. And I will respect the fact that it is a business, regardless of what economic environment you're in, it's going to pull up with pretty good cash flows. And if the debt is managed really well, I mean, lots of money on the table. But just so you know they're the biggest telecom by market cap now.
Oh, good job. Good for them.
Yeah. Goes to show how much better run they are than Verizon and AT&T. So Verizon's literally been it's been an oof investment for quite some time. So I wanted to get this out of the way. Probably the most boring part of I guess ever that I've ever talked about. And let me actually put its own section.
Leggett and Platt.
Oh, we can talk about Leggett and Platt right after though.
Oh, okay, never mind. I was wrong. I was discussing.
So we can talk about preferred stock and bonds.
I think
Dan
it
is
might
so
be Stan.
excited.
Yeah, you lost.
Preferred stock and bonds. So, well, now I'm demotivated to talk about it. I see no one wants to talk about it. All right, we won't talk about them. It will just be for me. I've been doing a lot of, trying to hunt for some interesting preferreds. I only found one so far.
He changed his name.
Dan Bondless Weston. Okay, well, I am trying. All right, I'm trying to find some because I'm trying to find yield for my cash account, and that's all. But yeah, I have pretty much settled between a slew of CDs, brokered CDs. That this time I just went with one and done because the expiration day or with the maturity day, different lingo, is important to me. And then there's like I'm basically doing half of all the cash is going into brokered CDs, and then a majority of the correction, half currently, and then I set that at a fixed amount because I'm going to have that in a CD. Then the majority, hopefully over time, is going to be more mainly in municipals for tax purposes, because municipals I don't have to pay tax. You got to be careful because some municipals are taxable. And then, of course, de minimis, blah, 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 blah. Yes, there are some cases where you'll pay taxes on anything in over the de minimis rate. So that's like if you buy a municipal that's too much below the face value, you'll recognize that as ordinary income versus long-term cap gains. But if it's de minimis, then you can recognize it as long-term cap gains. Fun fact. But who cares about that? And then there's the preferreds world where I'm keeping roughly that. So the municipals and the preferreds are the part of the cash that's going to be growing as it contributes just more to cash. And the reason why I contribute more to cash is like as the portfolio grows, like it's kind of healthy to also contribute just to cash. But it's not cash that's actually meant to be invested. So it's a little bit of a weird caveat. I have cash sitting around. Think of it like emergency funds, sleep well at night, fortress balance sheet of the personal household. I could choose to buy real estate with it. I could, if a crash happens, grab it and throw it into stocks. I care, Fabio. Why do you not care that I care? No, don't worry. Don't worry.
But you live in Florida. Why do you need muni bonds?
Federal income tax.
So you only get one side of the tax benefit.
Well, no. Being in a state that, and I've only lived in states that don't have state income tax, that gives you the power to buy any state's municipal bonds and not worry. Because if you live in the state of New York and then you buy muni bonds of any other state, and they might
there
have
are New York
yields,
municipal bonds,
but look at the yields on them. They're going to be typically lower because
it's just low yield, high expenses, trash. So
and because they have tax protections for people in the state of New York, you'll have all the New York investors when they buy muni bonds, they only buy New York ones. If they live in New York, they won't buy like any other state's muni bonds. But Floridian investor, Texas investor, Washington investor, you can buy anyone's. It doesn't matter. And you're getting the lion's share of the benefit, which is protection from federal income tax. And then there's no state income tax. So if another state has better yielding bonds in a fairly safe entity, you can take advantage of that and you can benefit from the higher yield plus the tax savings. So
have you ever searched on the used market at like some of the degenerate muni bonds out there?
Yes.
Like water districts in like the middle of Alabama or some shit. You're just like they're paying like 9-10%. Like, oh boy.
Oh yeah, no. I the ones I picked were in the for the Moody's AA2 and for S&P AA and above. I'm not going for like the degen stuff. I saw that yes, there's
some of those are fun to look at just when you're bored. Go to like your old bonds for sale secondary markets.
I started doing that. This is like this is insane now that I'm saying this. Like my younger self would have been like, "What are you doing, man? What's wrong with you?" I'm going into like the prospectus and and reading what they're using the money for. One of them is literally,
my school district just did a bond issuance. You could probably find it, I bet.
how much are you yielding?
I didn't look yet.
How much are you yielding, Dan? What's the yield? I'm doing it for cash flow, for income.
Oh, there's the Cumbers reference.
Yes.
Income. Well, okay, so the yield that I basically have pre-tax is 4.5% on those muni bonds. But when you take into account the tax savings, it's quite high. So it's actually significantly higher when you consider tax, because my CDs, I mean, they're paying like 5.4%, but taxes. So it's like, yeah, takes away. So it's
Barclays
like,
pays me 4.35, I think.
well,
Yeah.
Dan, I'm buying muni bonds that are yielding more than that. Have fun paying taxes.
I will. I'm a patriot. There you go.
Well, I'm lending. Wait, what are you talking about? I'm lending to the government. I'm giving them money. I am funding the school playgrounds. I am funding the buses. I'm funding the buildings that the children are taught in. I'm coping.
You're a
Anyways,
humanitarian.
I'm a humanitarian. Yes. And CDs, I'm going to make some argument about I'm providing liquidity to the financial system that is blah, 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 blah. Anyways. And then there's the preferred part of the business, not business, the part of the portfolio that for the time being, it's focused mainly on one, but I want to add more. And the other one that I found interesting was the Bank of Ozark one, but I'm still doing my research on that one. I don't really know if I'm, because I'm not trying to take on excessive risk. Like, let me just be very clear.
Why don't you go further than go to Redneck Bank if you're going to talk about Ozark?
Do they have preferreds?
Maybe. Their website used to be fun to look at. Where banking's funner.
Yeah, Redneck Bank is degen. Redneck Bank is wild. I saw that. They give pretty high savings account interest. But
it's probably some dude out of New York City that thought it was funny to do.
Redneck Bank. Which preferred shares? Yeah, I can talk about the preferred shares. Let me just preface by saying, guys, if you're not comfortable with illiquid markets, don't get into preferreds at all. Yeah, Bacon's nodding his head. I want to give that fair warning. Preferreds, you will do more than fine investing in common stocks. In fact, arguably, I'm handicapping my forward returns by not just having a much smaller, cash or emergency fund, and then just going straight common stock and investing and blah, blah, blah. But I'm doing this just for my own sake, right? So the goal of this is not to generate, crazy outsized returns, but more so just like a place to park cash. And then I have varying, let's say, layers of liquidity. If you guys been noticing how I've been organizing it. So I have currently half of it, an undisclosed amount. Half of it is in CDs. That's fairly liquid. And then right now I don't have it laddered, but I'm probably going to ladder it when these expire. But I'm deciding whether or not, well, anyways, we're going to get at that. And then the second part is going to be less liquid, right? And then basically I have my bases covered, less liquid after that into municipals, and then even less liquid into preferreds. What's going on? Oh, the fight is happening.
I was like, you called me a clown again. I don't want to take over your live stream, but
no. Say what you must.
Gil, first of all, you shorted NVIDIA, and then you claimed that you knew that they would do well after you shorted them and lost, which we don't even know if you actually shorted them, for all we know. So, kiss my ass. Secondly, you went to Strongman and said you were on his comments that you were going to sell QQQ and you were going to buy a 4x leverage S&P 500 to swing trade the uptrend on the markets coming up. What the hell are you talking about? Oh, I'm a clown. Okay, I'm a clown. You are the most emotional freaking moron I've ever heard trading. I don't understand why you even watch us anymore, because you do the opposite of what we talk about all the time. So have fun. Oh, character assassination. Well, I mean, at least I didn't short a company and lose a shitload of money. I mean, is that character assassination? I don't understand why you listen to us anymore. Like, feel free to go lose money following Meet Kevin, because you sound like Meet Kevin the way you trading, which you shouldn't be trading because you can't handle it. Oh, you're an emotional basket case. There, have fun.
I will say more the politically correct.
I remember all the shit you talk, or Gil, all these trades you talk about, and most of them blow up in your face. But then you lie and tell us you made money all the time. So it's okay.
Oh, Fuhat, just check portfolio updates. You'll see the ticker. If you go into portfolio updates, you'll see the ticker.
Of course, now Gil's going to say he made money on everything. There we go. Why do you watch us, Gil? If we're clowns, why do you care anymore? Like, call us clowns and just go away. Go find a better YouTuber than Fabio. I'll wait. Like,
oh, shucks.
I don't understand. Like, what are you trying to do? Like, oh my God.
Yeah. I'll say it this way. I'll add to the commentary, because I remember the original like point of contention that Gil brought up was like, we're gatekeeping options because we discussed like the Perry short, which, by the way, if everyone wants me to, I'll go through the effort of releasing publicly the pitch to short Perry when Perry was like over $20 a share. It's this company. So we already closed our positions. So the trades for us is over. Oh, wow. It's already back to 1250, which was like the strikes. But anyways.
There were lots of people that heard this pitch, right?
Oh, yeah. Tons of people, because the club now is huge.
Now people say, oh, you just copy people. It's like all your information, like some information you develop yourself investing. A lot of it is collected from other sources. You can't, I mean, we have full-time jobs. I can't my research is like my Carrier, my Tractor Supply, my Micron. A lot of the other stuff is aggregated, of course, but so people get so butthurt about the copy. A lot of people heard the Perry on pitch. Very few people actually executed. Like, and you could say, oh, you just copied. It's like, no, I did the research in the background, and I'm like, this is a home run. So, you can go cry to be brokies out there, but claim people are copying each other and shit. I can tell who copies people because you panic sell. That's when I know people copy. It doesn't go perfectly immediately, and they blame you and then they bail. Like, I see those comments. But we sat on this for what? At least a month. This wasn't something like I sat on. I think it was at least a month of sitting on it, waiting. Might have been longer than that even. So.
No, and I mean, like, this is like very different from what I saw as like far as what Gil was talking about, like his trades on options. Those may be more akin to like gambling, and I don't think like longer term they might be successful.
I've never shorted or I've never done any of this on QQQ, SPY, none of it. I've never done contracts on an index. The first thing he did to say that he was better at it than us was to index options. Something I've never done in my life. It's still based on research on companies. It's not a different dynamic from buying stocks or buying options. It's still about companies. Like, Gil, you shouldn't buy companies at all, man. You suck at this stuff. Like, everything I see you talk about, man, you're emotional. Everything flip-flops all the time. Like, you should just buy QQQ and stop. Like, you can't handle this stuff. Like, I've seen you talk enough. I don't know. I don't know why you waste your time doing this. You're not good at it. And that's fine. You can just buy an index, dude. That's perfectly fine. I'm mostly index now too. But accept my challenge.
Thank you, Dex.
What does this even matter? What does this matter? Like, all right.
Hi, Andrew.
Hi.
The other half of Two Accounts, One Gap. Plug in the channel.
You already saw it. Oh, yeah. 2 accounts, 1 gap. Give them a follow on YouTube. Search them up. It's these two gentlemen here. You found it, Fuhat? What did Andrew just walk in on?
Yeah. What did I just walk in on? No, I've been holding in my rage from the gym from what I heard that Fabio did.
Oh, with Monster?
I made you work harder. Okay.
Monster. I don't care about Monster.
Wait, what?
The
What?
number one position in my
KKR.
portfolio.
KKR.
And this man swing trades it. And then he says, wow, some guy trims the weeds or keeps the weeds and trims the flowers. And he sells KKR. What is this man doing?
Wow, he's actually upset. Listen to his voice. He's like, what is this man doing?
Oh,
All right, fine. Will it make you happy if I rebought it? And we do a Lecker Lad thing where you check in on me. You're like, did you sell it? And I'm like, no.
I tattle on you to
TRH.
Lecker Lad, just so you know.
I'll tattle on you. Is that what you said?
No, I'll message Lecker Lad like he's thinking of selling this stock again.
Lecker Lad won't let me.
I'm just teasing. No, when did you sell KKR though? I didn't know you sold it.
I sold it in the personal holdings like not too long ago.
Oh, okay.
Yeah, pretty recently as it's over 100. I was like, buy something else.
I don't see. It's funny. I don't follow your account at all because people are like, "Yeah, you sold KKR a while back," and I was like, "What?" I had no idea.
Yeah, there's been a while since I've done a portfolio update on public on YouTube, but yeah, the club member. I mean, yeah, if you're not checking the club portfolio, then you don't know what's going on, Andrew.
Mm-hmm.
Like, what? He sold? But no. Well, I wanted to shout out because when we talked about the Corpay, you're the reason why I sold Corpay. I have the messages where I have the message.
No, I know you are.
Yeah, you're like,
and it was a good.
Fabio, this was a bet.
Well, I think it was a pretty good idea to sell at that point. I mean, it's down 10, 12% since then.
Yeah.
Right?
Yes.
So, yeah, it's like rallied a tiny bit, like since like 260, but.
Well, hey, now that we have you here, I'd love to talk about the what are they called? The oh my god,
Payment processors.
Paycom.
No, not payment processors.
HCMs?
Payroll.
Yeah, HCMs.
Human.
That's what I was the word.
Was it human capital management?
Yes.
Yes. Let me just say, like, everyone's just like, oh, stock sold off 10% on a co-CEO resigning, like, by the dip. The guy was assigned co-CEO like 6 months ago, and then just like resigned out of the blue.
Is that the current CEO or the
No, it's not the founder.
Now? No, I'm saying is him booting him out?
What did the press release say? Not Paycor. We're looking at Paycom.
Looking at Paylocity.
Is it this one? Let's see. Paycom. I'll just share my screen if you guys want to look at it. I'm just trying to find it right.
While you're looking, double checking. Corpay, Paylocity, Paycom. Are there any other big players in this space?
Which one are we on?
Yeah,
the right one?
There's Paychecks. There's
Paychecks.
ADP.
There's Paycor. There's ADP.
Paycor.
There's
oh yeah, ADP. I forgot about that one. Aren't they kind of big?
What's the one?
The biggest by a long margin.
Okay, let me see this. Lean provider coming. Village. Okay, so they didn't even announce something here. So, how did it hit?
Yeah, everyone hears the doggo. Yeah,
doggo.
Doggo tap dancing.
Yeah, we're gonna clip her nails soon. She gets all excited when I get home from oh, so they had a bunch of stuff here. That's probably why. It should have been this one, right? The current report filing.
Should be, in theory.
But that would have been, I would think, the.
I mean, roughly 2 days ago is probably an okay time frame to do something.
See, okay. Let me go back here. This is sketch. Look at this. So this is the press release, right?
Zoom in a little bit.
Yeah. So here's the press release. It doesn't matter. This is the press release just saying they're promoting this guy to CEO, this guy to CLO, right? And you're just saying our expenditures, PEC has served out of roles. It's an honor to be in this position. Under his leadership, da, 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 da. Nothing about the co-CEO resigning. In the 8K itself, resignation of co-executive officer. Why they left that out? That's weird.
So then that screams pushed out.
Picked a
No?
fight with someone he shouldn't have.
Yeah, a severance and release agreement. I mean, it's a severance agreement. I mean, you can have a severance package if you resign, but I'm guessing this is the forcing out of this guy.
Yeah, because maybe it's like we only need one. Oh.
Yeah, but like that also might scream like they realize that they realized what I realized when they went to this model. So they should just make me the co-CEO. That it was a shit idea. That could be the other thing.
So why the interest in this co?
Because it's cheap as hell.
If I wanted cheap, I'd just buy BTI though.
Yeah, but this is, I think, got more of a secular growth story than that.
It's got.
Oh, okay.
yeah,
So
it's got
more growth than BTI. Okay.
When I say cheap, I mean like you're looking at, like double-digit growth estimates, low double-digit.
And okay, so we'll probably see some cannibalization from Betty, but then following that, there's going to be some growth. Because if Betty's cannibalizing a lot, there's two ways of looking at it. The positive is it is a good product, and everyone for the size customers they're going for, and people are switching over to it. I will say this. Okay, so someone we all know who works in a position where this is known to them at a decently large private organization, it's not public, said that their organization has recently implemented Betty and they love it. But maybe for other organizations, no bueno.
Of Betty?
Betty. For Paycom. And they own Paycom.
Who the person says again, the person that loves Betty.
Uh-huh.
Are they in HR?
No. They are not in the position that you're in. They're in a position that's adjacent to that person in that organization, and maybe one day in the future they will be taking that position.
Okay. Then they're pretty close.
Yeah.
Like they're close to the decision-making tree, and they said they love it.
Love it. That the people at the top love it for their organization, though.
I don't doubt that though. I've said this, so I've been very clear in saying this. I think Betty's an amazing product for certain companies.
Exactly.
I don't think it's a one size fits all.
So, but wouldn't it be the case then they have Betty for those kinds, and then they have the other type of certain, but they're just expensive?
No, they are moving exclusively to Betty.
Oh, they're moving exclusively to Betty.
Yeah.
Okay, so then they're going to silo themselves off into only certain kinds of organizations.
That was my problem. I said you don't need to exclude. Now, they had some issues with how they ran their business before, and so I think Betty's a bit of transitioning from the old model into the new one. Yeah, so Paylocity is more your like what you would think is like a normal HCM, just well run, as well as HCMs can be run. We have Paylocity though, and I've had my ups and downs with it, so it's definitely better than Paycor. Stay the hell away from that if you're an operator. Like, oh my gosh, how is Paycor stock done? Oh, it's greater.
Ticker?
PYCR. I don't know if it's. Let me. How much worse has it done compared to
Oh,
Paycom?
so yeah. We'll do 1 year.
Oh, they're about the same, Paycom and Paycor. And is Paylocity the same?
No,
Paylocity's-
Paylocity's done the best.
Yeah.
Yeah, I was gonna say take your victory lap.
No, my biggest victory lap was selling it at 170 after I said this was shit earnings. I'm getting out. I think I said on my Twitter, if you go back. And
Oh no, and before you pull that up, I'll vouch for you because you said that in the club. That was your public recommendation, and I was like, oh yeah, I think Andrew's right.
yeah.
I'm out too.
Yeah, I can't remember. No, this is it. I have it.
I just worry that is this the service that's
Dan-
kind of like a toaster with more macro inputs?
Well, I was
Toaster.
gonna say, I think Dan will like this GIF that I did. It says, my reaction, Paylocity has an awful earnings support, proves it's a commoditized industry exposed to broad macro conditions, but open only down 2%, so I could dump almost all my shares. Read that as all my shares.
Yeah, and that's what I mean by commoditized, as in eventually, in the long run, everything becomes a toaster.
I think these are commoditized. Let's pick this up. I just think that what do you pay for a commoditized industry that has decent margins and grows at a low double digit? I haven't bought any, for the record.
Okay.
Low double digits, probably closer to like 15 right now. 15.
Then you might want to hold off on buying.
That's why I have puts, Andrew. I'm like Paul Gabriel.
Also, by the way, Paylocity is way more expensive than Paycor. I just want to point that out. A lot of people use Ticker, and Ticker uses BSPE, which is normalized earnings, and a valuation multiple. So you actually need to compare GAAP to current price, like GAAP estimates on EPS to current price. And if you do that, you see just how much more expensive Paylocity is. So let me pull this up here and just show you. Because on a per share price basis, they're almost identical. And so this is the
You said you meant Paycor or you meant Paycom?
Paylocity is way more expensive than Paycom.
Okay, because you said Paycor.
So like these are their 2024 fiscal year, which admittedly, maybe we can just do LTM. Am I allowed to do that? No, because these are estimates. But like, look at these estimates. Paycom EPS estimate 783, Paylocity 343 on GAAP. If you go normalized earnings, which I hate, which is just basically backing out SBC, then it gets a lot closer. But actually, Paylocity is growing obviously a lot faster. Even on GAAP basis, I think there's like a one-time thing that's backing this down. So maybe this is a bit funky. I don't know. But even still, like Paycom is way cheaper.
So Paylocity was the more expensive, more attractively growing business the whole time.
Well, yeah. And that's kind of what I said. I mean, if you go on a free cash flow basis, then obviously it changes. But like, I think EPS gap, because then you're baking in the SBC, because I should be able to look at this financials, cash flow statement, stock-based comp.
Pew!
It's not that much more.
The numbers, Mason, what do they mean?
I wonder why. Oh, you know what though?
What the?
Paycom, I forgot this. Paycom does a funny thing. They capitalize a lot of their R&D. So that also makes their EPS kind of funky, if I remember right. So that also could be part of it. But either way, it's not neither here nor there. Right now, I'm not buying any, but I think if they fall a little more, then they get interesting. Yeah.
So, for example, fall a little more. I'm just trying to basically get some confirmation bias here. What do you think about my 120 strike on Paycom? Would you think $120 is a fair price to pay for Paycom? given current information.
You're saying 17 times earnings?
Yeah, that's what I came up with. Current.
It's probably closer to like 16 and a half, but
By the way, keep in mind I mean, we're talking about 120 in January of next year. It's not a European option, but
fake alias. I have to dig into it more on how they classified it. It was kind of funky if I remember right, but like I'll look at it again. I could be remembering incorrectly.
Thank you for the meme, fake alias. Such a great one.
So here's my other question. So one of the things Paycom's exposed less to than Paylocity is rates, because Paylocity makes way more money off interest income. And I think that was one of the things I pointed out, which actually has helped Paylocity through this because rates have stayed higher than people thought for a longer period of time. So you're gonna run over the other dog, dude. So one of the questions you have to ask yourself too is, where do you think rates are going and how is it going to impact these companies? Paycom doesn't break out their rates. Back when I was like evaluating if I wanted to buy it, I broke it out. I have to do it again to like kind of get a rough feeling on where they're at. Paylocity does. So if you go to their financials, they'll break out interest income. So, that's kind of a big jump. And then LTM, it's 114. So like, what does their growth look like when interest income comes back down? Right? It normalizes. Like that's going to be a headwind on their growth. And it's going to be the same thing for Paycom. So like, what's their actual revenue growth look like? And so it also depends on where you think rates go. Now, obviously, it's not going to go back here. Zero, even here, I don't think it's going to go back to. I think these were like abnormally low rates. But it goes back to here or here. You're talking, and this is basically all bottom line income.
Sidestepping that a little bit. I actually like rates here. I think rates here are fine.
Oh, you mean like
Can you zoom out interest rates all the way?
Yeah, this is their interest income, you mean?
No. It's another chart. We got to look at like where interest rates are at.
I'm guessing St. Louis.
Yeah,
that has it. Girls, you really need to shut the fuck up. Okay.
Woof, woof, woof.
I was just looking at short end, so like 0 to 3 month treasuries.
Does it have? Am I looking at one of these?
Here. I can't for some reason read your screen. Okay, I just made it bigger.
Money market accounts?
No, right there, Fed funds rate. Down at the bottom, second. Yeah. Yep, no. Bottom there.
Yeah,
yep,
okay.
FRB.
I should be able to click on this, right?
Yep. And then, okay, that's max zoomed out. Yeah, like that's what I'm trying to say. Like we're kind of like at that midpoint.
But like the one thing I'll say is look how much these things have moved. These things don't stay steady. I mean, I guess this is a really long, but like, I mean, they stay that place for a couple of years at most. Rates move a lot. Dude, this period is just crazy.
Oh yeah. And maybe we move back down towards like the 3-4%.
So you think here-ish?
Like I don't see that much of a problem. What I'm trying to do right now for like the cash account, for example, is I'm trying to secure preferreds. I'm hunting for preferreds right now that I don't think are going to be called, and I can lock in like a current yield because I do think they could move. There's a chance we could move down.
Mm-hmm.
And like there's a lot of preferreds out there with like floating rates, and I don't want those. I mean, like there's like plenty of bank ones that are like that. I don't want to buy, some people might be saying, oh, just buy a longer dated bond. Like, no.
Why? Because a longer dated bond be callable potentially?
No. Like if you buy a longer dated treasuries, like you'll be locking in that yield.
So why would you prefer preferred over that?
I can get more yield because right now
Okay,
especially
okay.
the yield curve being inverted, like you're getting less yield.
Right.
Yeah, you're getting quite a bit less yield, right?
Depends on how far out you want to go. Like,
Then you're not locking it in that long.
but that's my point. Is what you're talking about.
Yeah, and then if you go too far out, then you get the problem of course, now you could trap that capital. If rates do go up on you, and that could be a problem.
Mm-hmm.
And like the rate, the yield that you'd be getting is not rewarding you for that risk at all.
Yeah.
Like,
Hey, I have an interesting thing to talk about too once we're through this.
yeah.
But my dogs are being really annoying, so I'm gonna put them outside. So let me just take them out. They're like jumping on my lap constantly. So I'll be right back.
Dogs out.
Oh, no worries.
Yeah. Sorry, I just want to like let you know I'll be stepping like out for a second, but I'm not leaving. I just want to.
Yeah, for a kind of briefing on Dan's question there, asking Andre. So I will be releasing, I don't know at some point in the future. I haven't decided exactly on the time frame because I'm trying to keep it exclusive for the club members for a while. But there's a very interesting pitch. We brought on a returning guest, and he pitched a stock to the club members. I'll be releasing it to the public at some point in the future. I haven't exactly decided.
But like to answer without talking about the Gary pitch, I've been following Fidelity National for like 2 years now.
Yeah.
So, which is not the separate from what Gary, which is interesting because you could almost they're both insurance related to housing. You could almost play them back and forth. I was trying to think when he was talking, but I was following Fidelity National for like 2022, 23. And I'm like, once interest rates we think start coming down, housing starts picking up, I thought it'd be an interesting investment. Like Gary, because like I was already on top of it. It's a volume business, title insurance, which is different from what the other thing that we're not going to talk about. But the problem is like, if you look at the charts, like housing sales have not gone up, but Fidelity National stock price like skyrocketed. Like people jumped into it prematurely for the expectation of housing this year, which has not come about. So I'm still watching it, but it's just so weird because everyone was so sure that interest rates were going to start dropping. I think like by March or middle of this year, a lot of the housing stocks ripped like very late in 23. So now he's just kind of a watching game, but like, this is a good FNF. Like if volumes of home sales pick up, this is a good option because that's their business. It's just title insurance is just a volume business. Very low risk. So for people, like, I don't know if people know, like your lawyer, you hire a lawyer when you buy a house. That lawyer is basically doing a title search for you. That's their primary job. And you think, who gives a shit? Like they're making sure that no one has a claim to your house when you're buying it. This is very like, it's one of those things like, what are the chances of happening? Almost none. But if it does happen, it's the most catastrophic thing you could imagine happening in your life. So combined, so you have title insurance, which I don't know if you pay it directly or the lawyer. I don't remember the exact process, but and then that's what you're paying your lawyer for when you buy a house. So
it's almost like that's insurance.
Yeah. Or like not just like another person having a claim. Like we had a situation, my house right now, one of the forms we got said residential for zoning, right? So it's agriculture, residential, commercial normally. My house, one piece of paper said agriculture / residential. Everything else said residential zoning for my property. So she had to run that out. Like, why was that on that form? And it was just a clerical error. But she had to make sure because if it's a zoned agriculture, then technically I can't have a house on the property. Like the town could say that you have to like get rid of the house. So it's something to, I guess, put in your back pocket for people.
Great value add.
The Gary part, I was very interested in that. So for people that in the club, very interesting. The other part of the insurance of buying a house, which I've never had that insurance because I have VA loans, but
yeah,
I guess we won't talk too much about it. Wait till you release it.
Well, yeah, it's an interesting investment.
You almost want to buy those companies when things are bad, from what he described. You don't want to buy those companies when things are going well. a little bit. I only had brief time to look at the company you talk about.
Like really, really bad. Yeah, I see.
Yeah, I guess
Uh,
we will leave it. This is killing me talking about.
we can talk about it in voice chat in the club.
Yeah,
Because we
people are
left
interested in the. Like it's for members for now. So
We're getting a question about Toast, or not question about Toast, just asking us to talk about it. Let's talk about Toast because they have they have HCM.
Toast. Well,
Yeah.
I'm assuming for back of house.
Yeah,
Staff?
payroll. Mhm.
Yeah.
So,
have
because
not
I
looked
think
at it.
at this point we know it's commoditized HCM for sure, and that was like part of your tweet that you shared with everyone.
Mhm.
Toast has, of course, the POS front of house services that help you with customer service, etc. Taking orders from Uber. By the way, we also have someone asking about Uber. Someone tell me, is Uber like crashed or something?
I don't think so. Let me double check though.
I own Grab, which is the international Uber.
I bet Uber got hit a little bit because of Amazon's announcement.
Yeah, like from a 1 month perspective,
Delivery.
it got hit, but like
Grubhub's
5 day-
deal right with Amazon Prime.
Yeah.
Oh, see, like I don't pay attention to those things too much, but
5 days, it's just been chilling and vibing, bouncing
the
around.
market on Friday was insane. Okay, so yeah, I think it's okay. It's consolidated back a little bit, but I don't know. I like the business. I had it. I owned shares of it, but I sold out. No longer an owner.
So
I like
we
Grab.
have work grants now. They pay for transportation with Uber as an option now. Very interesting.
Oh, really?
I got asked that technical question from if you could use federal grants for that use for transportation, which I said yes. So they sign in and then they reimburse them for their Uber because the person still has to use their phone to get it. But
Someone asked, or Fake Alias asked, is Dash a shitco? No, Dash is not a shitco. I think Dash is legit. That's what. Okay, so Fake Alias, I remember you were probably around when we had the episode just talking straight about Uber, Lyft, included Dash. If you reach a certain scale, and I think Dash and Uber are the only ones in the United States have reached that scale, Lyft is like so far behind, where you can basically command and have that network effect where the restaurants have to use you and people really want their food delivered, etc. I don't really see how you don't end up making at least a good amount of money in the longer term. If you look again, breaking through the expenses, and you're an accountant, I know you are, breaking through the expenses, you can kind of start to piece out together what probably in the future would be reduced if they decide to. It's about like choice. Look at the expenses they can choose to reduce in and what they cannot reduce in. Right. So like in the case of like cash flows, how you can think about it, right, is like what is maintenance CapEx and what is growth CapEx. So what expenses, because sometimes with some of these software businesses, the expenses may not show up in like the same way as like another business might. In this case, like for Uber, like there's a lot of R&D expenses. There's all these other expenses that were quite high, and then they started to focus and hone in on them, and those started to really crunch up. I think with DoorDash, probably something could also come about from that. So, but yeah, Toast. What do you guys think of Toast?
I don't have an opinion. I haven't really actually looked at the stock.
I like Toast a lot. It's a company that I like a lot, don't own, and I did own, and I cut the flower. I bought it near the bottom, if you guys remember, in the holding co. I legit bought that thing close to like 14, 15 bucks.
I just don't know enough about it, honestly.
Okay, so basically think of the most restaurant-centric POS, payroll, pretty much all in-house solution for restaurants. And then that's Toast.
It's an
and when you have them, you're not going to switch.
It's a POS for restaurants as well as an HCM for restaurants.
They have that in there, yeah. All really works well within their own ecosystem. Once a restaurant uses them and starts integrating it starts using all their other services, they don't leave.
But do they have a flywheel?
Like, so I also a question. So like, let's say, okay, you have your friend's restaurant and they use them. And it's like, wow, this is amazing. I'm never going off. Is McDonald's going to use them?
No.
Okay. So it's not like the big players aren't going to use them.
The very biggest players are not going to use them, correct?
Okay. So it's like an SMB restaurant?
Well, scratch that. I mean, it really is dependent because I don't think McDonald's is going to use them, but also at the same time, I don't know if you want McDonald's that much. McDonald's will bully you. McDonald's is going to come in and say, yeah, you think you're going to charge us this much? No, we're going to tell you what you're going to get. And so I forget who has, if you go to McDonald's and you see it, it could be like, I don't know if it's a Shift 4 that has them or some other company, but could have been First Data, maybe a legacy business from First Data, but someone uses McDonald's uses someone, and that company is bullied. It's NCR. Thank you, Fuhat. So NCR, if you look at them, like tiny little company by comparison to.
Fuhat.
Would you say these EPS gap numbers are right? Because if so, it's like pretty expensive right now.
Yeah. No, it's expensive. That's like what stops me. Let me say why I like them. There's like some have you ever had a stock that you have like, oh, I kind of like it. I like that company, but you don't own it?
Mm-hmm.
That's what Toast is to me. It's like it's a weird relationship I have with Toast. Like I like it. I like what they do. I see how it could be kind of interesting. It's one of the more interesting ways to play restaurants. You know, like, oh, are you bullish restaurants? Toast. Are you not bullish? Instead of buying a restaurant, you can kind of get a hand in the pocket of all the restaurants because you make obviously like from the transaction volume itself. But it's not as quality of a business as like Visa. Someone's talking about Visa in the chat. Like I love Visa.
What is a quality business is Visa?
Yeah. Which I had Visa for a moment, but I'm probably going to rebuy Visa, by the way. I had Visa for a split moment. I think Visa, while its returns are not going to be like just destroying everything, I think they're going to be fairly predictable and decent. I think that it's likely they could outperform. But the only thing that I'm worried about with Visa is if you have cross-border transactions come down from some sort of global recession and travel declining. So, all right, guys, we got to come up with an AI stock to retire by December.
Well, you completely blew off my AI stock, so I'm not going to tell you one.
GLW, I know.
Yeah. You were like, oh, it's an industrial. It's not growing.
Right. How is that an AI stock? Please enlighten me.
Well, if you do more research and just looking at this.
Fiber optics. Somehow.
Yeah. I think they're projecting $3 billion in incremental revenue growth from data centers. So it creates passive optical connectivity solutions. Ooh. Strengths are value. I think like it's the fiber optics they help build in. Yeah, the fiber rich network to connect the GPUs. So they do the fiber. So they're getting into just now the fiber networks, which is kind of late. So I don't know what that means. That's why I said I'm like still early in on looking into this. And they say that they're accumulating significant customer wins for upcoming AI data center builds. Revenue low single digit hundreds of dollars per GPU. So this is all new revenue coming in because they haven't been like. So I think they say down here somewhere. Obviously, like all the analyst questions are like, "Oh, data center." So so, like when they'll start flowing into Corning and everything. We start off. Get Murphy answers. That's the other thing is like I think they have a lot of sales in Japan, so the weakening yen has hurt them. So if you think the yen's gonna stabilize, it's gonna be really positive for them. But that's anyways, I'd have to go through it. Yeah. So 3 billion of additional revenue. I mean, I guess it's growing to 3 billion over the next 3 years. But like it's a cheap company. Also, if like I think you were saying they do like the screens for phones. If you've noticed, Apple has kind of had a trough in earnings. So if you think that's going to go back up, this company I think could be interesting.
Cyclical play.
Cyclical play, aided by AIDC capex, aided by potentially yen stabilizing. There's a lot of moving pieces there, though. But I did want to mention, by the way,
when you say they're cheap, how cheap are they? Oh, and then we'll get into IAS. Like earnings, I'm looking at Google. I don't know if Google's right. It's 52. Price
no,
earnings.
I mean, forward it's like 18.
They've always been around there. Okay, so they're not, they haven't moved too much in the grand scheme of things. They're like pretty flat from like 2020. So it's not like this is a boat you missed. Okay, so if they're getting into DC and you have what, a $31 billion company, they're getting 10% of their market cap in sales over the next couple of years in a single business. Oh, by the way, so I'm just loving Toast even more, Andrew, and I'm not kidding. So look what Fuhat's saying. And Lakers is also saying, okay, so hotels, they're getting into hotels, small specialty stores. So they're going after they've dominated restaurants, because I see them on a lot of places for restaurants. I think that they're, from talking to people who use it, they love it. So if they can do what they did to the restaurants, to the hotels, to the wherever, basically, if they can start kicking Square's butt, because that's the really attractive part of Square, by the way. I think we all know that. The part of Square that's like really attractive is the POS business. It's attached to a bunch of stuff that people are like kind of, ugh. And right now the thing that's causing the problems is the Cash App part of the business. And then they bought the music business. They bought the buy now pay later business. Also you may not like this about Toast, but they do have a credit arm. They extend small business loans to their restaurants, and I think they sell the loans off, or I think they're just an intermediary. I have to look into this, but I don't own the stocks. I didn't look into it yet, but they're either an intermediary or they create a loan and they sell it off pretty quickly.
I don't know about that, but I'd have to understand how their underwriting is. You just have to know.
Oh, never mind. Okay, so they are just an intermediary. Thank you, Fuhat. So they are just putting they're the middleman between them and a bank. They sell third parties. Okay.
I don't. It's a company I'd really have to like study more to understand, because like, just looking at it today, it looks really expensive.
It does look expensive. It's crazy though that if last year though that was a very reasonable price. $14 I think was a pretty reasonable price for the forward growth.
Yeah, I mean, if you're saying almost 50% cheaper, so you're talking closer to like 25. I mean, it was probably closer to like 30. I don't know if there's been
what is sell side saying that earnings are going to grow at? So the current PE is what, and then what's the growth rate?
Well, they'll say here I mean, oh, Dan left.
Yeah,
they're seeing the GAAP EPS obviously just like inflecting and going up a lot. 200, 136, 33, 40. If you look at the net income normalized, which I guess you go off of, or if you want to go at EBITDA, which is probably like a more, I don't know if this is adjusted EBITDA or not. That might be more like consistent to see like actual underlying profitability growth is looking like. Because it's more consistent, if that makes sense. I mean, it's pretty good. Like, I hate how they do this. Let me just do it like this. I mean, you're looking at pretty solid growth, right? Because you're having top line growth with expanding margins. But what else could you get for 45 times earnings? And how does that compare to this? And 45 times free cash flow.
Just
50,
by
50
monster.
times earnings, 45 times free cash flow. When you could get something like IAS for super cheap, as they've sold off because their PE, and they might sell off a lot more potentially, which would be really exciting.
Oh yeah, let's talk about IAS. Tell me.
Did you see this?
Wait, hold on. I'm putting timestamps in. I'm correcting. What am I looking at?
Yeah,
So
what is this?
Vista Equity wrote off the Pluralsight.
Pluralsight's
Vista
a
Equity.
competitor.
No. So Vista Equity is the PE firm that IPO'd IAS.
Mhm.
They took Pluralsight private in, I think, 2021 for 3.5 billion. And now they're writing it off, saying like they can't pay back their debt and everything. So they're writing that off. They lose the equity in it. So I think the thought is that they might sell some of their IAS shares to get, maybe some what's the word? Some liquidity. And so I think that's why it sold off. Like it sold off 4 or 5% on Friday. If that thought process is correct, or maybe, it turns out that some selling pressure was from Vista. I doubt it. But if that holds true, then, you could see some extended weakness in this. But I wouldn't think it would have anything to do with fundamentals. And I think, if anything, it gives you a buying opportunity. The actual underlying business, I think, at this valuation is so incredibly cheap. I don't know how many times I can say this. Like,
Say it 3 more
if
times.
you want to go off cash flow, you can go off cash flow. If you want to, it's incredibly cheap. It's incredibly cheap. It's incredibly cheap. If you want to go off cash flow, I mean, you're talking like 11.8 times forward free cash flow. And I think they're going to beat and raise again. I think they're very conservative with their guide is after Q1. If you want to go off of EBITDA, then they're like 8.4 times, which is extremely cheap. And the normalized earnings is 13 times, but that's taking out SBC, so whatever. But I think anyway you cut it, especially as it seems like I think the sell side estimate's very low for 13 times.
I forget what's your... Oh, go ahead.
These numbers are no way right. Okay, that's cool. I want to say management's guidance. Let me just pull up, because they had a very good Q1 and they only raised their rev guidance by the Q1 beat. And they're basically asked, like, why aren't you raising it more? And they kind of like deflected, and basically they're like, it's kind of so let me see here. The answer I would expect from someone sandbagging. So like, I love this, by the way. Yeah, if you know the backstory.
Oh, yeah.
On behalf of investors, thank you for doing the
verify.
mature thing last quarter and kind of making sure you weren't overly sticking your neck out. Just getting back. Anyways.
Shot at double verify.
Okay. Wait, is Jay show with one more? Sorry, I'm taking long. I just gotta find. Was it like one of the last questions?
It's a great last name. It's a very strong last name.
Oh yeah, here. So just looking at your guidance, it looks like you raised guidance for the year by about 3 million. First quarter is maybe above your guidance by about the same. So it looks like a pass through to me. I was wondering, first of all, if that's correct. And so he's basically saying, like, why didn't you raise it more? Our full year revenue guidance was an increase of 2 million at the midpoint of the range, and we increased our EBITDA by 2 million. Regarding the program, like I said before, nice momentum across. Like basically, they say, the first we're for new cookie-free products. Like they don't say. I think that the read I took from this was we're very positive on our business. We're just not getting out ahead of ourselves, and they're conservatively guiding. And I think if you look back, that's pretty on brand for them. I think they guide pretty conservatively in general. And so if we go up to what their guidance was, turning guidance, we are increasing 533 to 541. And their EBITDA was 171 to 179. So they're just, I think, sell side just smacking the middle of the guidance, which I think is the very wrong thing to do here. Anyways, I'm taking too long to just kind of say, I think you're getting a very cheap company for extremely cheap. That is probably going to end up growing quite a bit more than what sell side's currently penciling out. Let me see. Yeah, because they went right at 13%. So yeah, they're just saying 13% midpoint. So I don't know. I kind of see this sell-off as a nice opportunity to potentially get in more. But we'll see.
Yeah.
But I think there was a scare that Vista, the PE firm, because if they come out and say, hey, we're selling, and it wouldn't affect the actual dilution or the valuation of the company, but it would create selling pressure, right? If Vista comes out on Wednesday and says, we're going to sell, 10% of the shares we own, that's going to have an impact on their, just on pure flows. It's going to happen. So.
Double checking. What was your rough cost basis on this co?
Above where it is today.
Oh, really? Okay, I thought it was lower.
So that means if you buy now, ladies and gentlemen, you can have a better cost basis than Andrew. Everyone point and laugh.
I want to say it's. Let me see.
You
The
squinted
face was
harder
good.
than I did. Andrew's in the zone. He's locked in. I haven't seen him this in the zone since Khan or B. Riley. Man of singular focus.
Looks like average cost basis is around 1046.
Oh, okay. I didn't. I was content with just.
No.
rough.
I'm sorry.
Yeah.
No.
Yeah. You don't have to
That's
give
wrong.
the
I have
exact
to
number.
factor everything in. Give me a second.
Yeah.
1157. No, it's closer to like 1150.
Okay. Yeah, because this is a public live stream, good sir. Rough numbers should suffice.
Oh no, you're fine. It's easier for me just to pull the cost basis from my broker than like do the math actually. I don't know what this dog is asking me to do. Okay. But so I think that's a scare there. But like it's not the sexiest of businesses within ad tech. But yeah. In what I'm looking at, I see a lot of positive events that are going to drive up advertising throughout the year. And they have a lot of agreements they've signed that I think will be very positive catalysts for them. So we'll see what happens. But what What's crazy is I think if you compare them on a price basis, let me pull this up here. Like, I think, and let me just pull this up. And what the fuck would I put? How did it do since then? So May 8th. So we look at since this, let's see, IAS. So it's actually like, you would think after management kind of like came out, did their earnings report prove that they like aren't the same company, they would be one outperforming. But it actually looks like either even or they've underperformed. Double verify. Which is interesting.
Bigger company, better.
They're about the same on a revenue basis.
Interesting.
So, yeah. But that was my thing. I think Vista could be giving you an opportunity here if they decide to come out and sell.
Even more of an opportunity.
A big opportunity, because I don't know, like, because think about this, right? Actually, this is a very interesting thing. Are they in the same fund? If they're in the same fund, it definitely could create selling pressure, right? So let me see. Pluralsight's and their flagship, I got in IAS's too. They have on their website. Yeah, so they're both in the flagship fund.
Uh-oh.
So what could happen is you have redemptions, you have something happen. They may need, because this, so if we look at the flagship fund, what's the most liquid thing on here? I don't know. So here's flagship. How many of these are actually publicly traded, and will it? It's like that one's not, because I think if you go to IAS, like it'll say like NASDAQ IAS. So you can kind of no, almost none of these are publicly traded. And so if you're a company, hold on one second.
Thought I had to sneeze for a moment there. While Andrew's muted.
Sorry about that. So then you have, okay, so back to this, almost public. So I wonder if they have the same. CVT. Yeah, well, they sold off a lot. They're tiny though. Is it the same thing? No, that's NASDAQ CVT. Anyways, I'm going on, but the point is, they might need to sell IAS if they need that liquidity from losing a $3.5 billion investment.
So
right?
That makes sense.
So that's why I'm like doing this boring thing of going through this and finding. They have Klarna. That was like the big thing. But like, I mean, I have found one other one, and it's so small. It's not like if you Google it, they pulls up some $90 million, Jamf. What's this?
A holding co?
The holding co.
I think this one's. Well, what do they hold? But That would be my thought, is that there you could see some selling activity based on nothing to do other than needing liquidity. But markets are efficient, so I'm sure then, based on publicly known data, that it'll rebound quickly. So what do these guys even have? Doesn't matter. Defining app.
They have 98% subscription revenue. That's what they have.
Looks like they're an Apple platform.
Yes.
Oh, cool. So that's just my thought with IAS, is you could get. Anyways, point is, I'm trying to drive home. There is a potential that you have indiscriminate selling. IAS sells off more. It could get down to the 8s or 7s because Vista owns 40% of the shares still. So, and I don't know what it's 22% of their 13F holdings, I guess. Based on what that just said.
So it liquidates, we get some selling pressure. Hypothetically, final time to add before we find out if they're really actually benefiting from broader advertising throughout the election.
Yeah, their entire portfolio is like 3 companies publicly. It says PWSC, JAMF, and IAS. So yes, you could get some more selling pressure. And my assumption would be it's from these guys if that happens. Power School Holdings. But is Power School in the same fund? Power School? I don't know. It's 4.3 billion. Might not be a shitco. I don't know. But so I think that's what's going on with IAS. So yeah. Anyways, that's just what I wanted to talk about with IAS.
I mean, I like the thesis.
Why does this guy's investor relations look like they're just like a old Facebook from 2010?
Seemed like a good idea.
Can you see that?
It seemed like a good idea at the time.
Yeah.
Look at that. Isn't that exactly what it looks like?
Yeah.
Probably was a discount offering from Getty Images or something like that.
Speaking of Getty Images, Shutterstock, and all them, Google's is the best. Andrew, do you want to buy more Google
right now?
Yeah.
No.
It's kind of grown back into its valuation though. You don't want more Google? It's trading at the cheapest multiple of, I think it's cheaper than Meta. Andrew looked at me like a
I have a hard time trusting this
management team. Yeah.
And I don't care about how the share price is done. I have a hard time trusting this management team. It's really difficult to trust them.
What about the greatest company of all time?
Microsoft?
No. Galway Metals Inc.
The hell?
I'm only saying because Andrew's here.
What is that? Galway Metals?
Yeah.
Here, Fabio. No, Fabio. Just look here. Share your screen and you can look them up. We'll go through it.
Okay. All right. What do I look at?
Just do Galway Metals.
Okay.
Oh, it pulls up there.
Oh no! It pulls up the not cool one.
You have to find the ADR.
This is cool.
No.
Look up the ADR.
It was a joke.
Okay. What do I type in?
Do Galway Metals again. It should come up. Let's see. Right there. It's right
There
below.
we go. That ticker.
I've gotten called that before on Twitter.
Oh.
Yes.
Oh, that's a great ticker. Okay, so it's not actually because it's a shitco or anything. I mean, it's a shitco, but like
Yeah, but it's what Andrew may or may
we
not
should
have been
short it.
consulted with.
Kidding.
Shorted to death.
28 million. Dude, wow.
Yeah. I immediately destroyed this live stream.
All right, we ended off with the comment or the conversation that Bacon wanted from the beginning. And Andrew loves this conversation. B. Riley.
B. Riley.
B. Riley.
We're talking about B. Riley?
No,
We have enough
Bacon
time?
brought it up at the very beginning. If you guys want to.
I mean, we can talk about B. Riley.
Do we really
Bacon's
want to,
like-
though? Yeah, like I really do feel bad for the viewing public, the viewers.
I mean, they're all still here. They can choose to stop at any point. They can choose. They can say,
I think
you
B.
know
Riley's
what?
where it
3
gets very
hours is
interesting.
enough. Yeah. And I'm putting the timestamp in. I mean, there's timestamps. People need to sleep. They can always come back. Be like,
What I mean, do you want to talk about B. Riley?
yeah, I already put it in the timestamps now.
No,
All right.
There's
we
no
have
turning
to
back.
talk about B. Riley.
Should we disclose our if we have any
Bearish
positions
position?
on B. Riley?
Yes, we should disclose that ahead of
Yeah.
time so
Yeah.
people know. Because sometimes people go like, you need to disclose. Just in case. They're like, okay.
Yeah.
For full disclosure, I am balls deep long B. Riley. All right, there you go. I did my thing. Oh, wow, he disappeared when he did that. Do that again. You disappear.
Oh,
Oh
yeah,
my-
yeah. Sometimes the I don't have a green screen behind me. So.
Bacon's like, watch this. Oof. All right, so B. Riley. Andrew, what are you? Short, long?
I am
Bearish.
short.
Yeah,
Okay,
bearish.
I am short. Bacon?
Bearish. I purchased puts.
Oh. Here, hold on. I do have a quick message though, because there is quite a few people that are long B. Riley.
You mean GAYMFers?
No,
Oh,
but if you are a long B. Riley, then I do have a message for you. Let me share my screen real quick. It's a quick message.
uh-oh.
Is it you?
That's a smile. You see a little smirk? See a little smirk?
You're long B. Riley. It's one of my favorite. Okay, we'll actually get into the discussion here.
All right.
Um,
So, quick summary because there's probably newer viewers, just in case. They don't know what this is, but we don't have to go so deep into it. Basically, I want to navigate the discussion more so towards their survival and the current state of affairs.
okay.
But quick summary.
I mean, the Bacon. Go ahead.
Okay. It's a overly complicated company. Some might say it is a financial services company that has gotten high off of its own supply. Financial services, also like a bit of a boutique investment services type company. And their portfolio of companies that they own and lend to are more or less like Vitamin Shop and Shitcos, more or less. The problem with this company also that why it firmly got on my radar was 10K was delayed, and then once the 10K got released within NASDAQ compliance, the auditor's opinion alone was a bit of a gem Their most recent earnings call, I would picture it as not great. I'm trying to be diplomatic here. The other thing was there was also discrepancies, noticeable discrepancies between their most recent quarterly documents and their investor pres documents, as far as just flagrant numbers not even lining up properly at all. I have gotten pushback, which I'm thankful for, in that the auditor's opinion was an adverse opinion, in particular on the internal controls, which is an important nuance. That being said, though, if it were not a problem, then wouldn't they just get an unqualified? And wouldn't the documents, wouldn't the 10K have been released in a timely manner without NASDAQ compliance even having been a concern to begin with? Um, so that's we can make of that what we will. Questionable level 3 valuation, how the auditors worked with management's valuations on the companies that they own or have lent to. Basically it's losing money, over levered in bad ways, and what they own. Not great, Bob.
Um, the other thing is you don't almost even need to go down that whole rabbit hole of like late 10K filing, all the issues. Some people accuse them of fraud, all of that. Take it, and it could be true, it could be not be true, but like throw it out the window. What you have is a company that it has some financial services. If you look at their revenue, they have some loans that they lend out, and they have some services that they do. But one of the main things they do is they have a portfolio of companies, and these companies are absolute dog shit. And if I could like just take every individual company and short it, I would. That's how bad they are. Like, we have gone before in the club and looked at each company and been like, this is so garbage. Just going through, and really, I mean, and then the problem too is that they have loans to these companies, so they have related party loans. So like you have this portfolio that's going to die. They are a very levered company themselves. I think they have 1.6, 1.7 billion in debt. They have been liquidating their public portfolio, and that's like, you want to talk about Vista potentially to sell IAS. Yeah, you could see that happening. But they are selling their public portfolio to, by the way, that chart doesn't go back far enough. The actual chart of B RILY, if you go on Max chart, is really fun.
I'm going to find it.
But they have net loss both on a cash flow perspective and just a GAAP or just accounting standard, but are still issuing a dividend. Yeah, you can see just that.
What's the story here?
Look at the time.
Oh wait.
Oh, should have bought it here.
Yeah. So I just think that companies come, companies go. I think management sees writing on the wall here. I think there's a lot of problems with this business. I don't see a way out for them to turn their crappy businesses around. They just sold. I mean, I think they sell them for like they sold one. It was less than the value of the assets they sold it for. So, yeah, senior notes payable. So they have term loans of 600 million and senior notes payable of 1.55 billion. So they're over 2 billion in debt. With 190 million cash on the balance sheet.
And those were payables, right? So debt due like now.
Those are
in the next
Current?
year, right?
no, those aren't current. No.
Oh, not
Oh.
current. Non-current. Okay.
But this is a problem I always have with a company if we go down. You have a net loss of 47 million.
And you're paying a dividend. Let's not
Paying
forget.
a dividend. How do you bridge the gap if you have a net loss? And why do you have a net loss? It's not like there's a one-time thing. It's not like you're a growth company inflecting the profitability. You have a net loss because your business has deteriorated. How do you bridge that gap? You do one of two things. You sell assets or you get debt. Both of them fundamentally weaken you financially. So, I don't like the prospects for them. So that's just
Holy shit! Look how
What?
much the dividends they're paying out.
yeah.
Like relative to their market cap.
It's a sustainable dividend.
It reminds me of fat brands in a lot of ways.
Yes,
I've
Fat
said
Brands
this.
is crazy.
I've said this multiple times. The other thing that's like really sad is one of their services they do, and this is something like there's some kind of, we'll call them neurotic short sellers on Twitter. But one of the things that RILY does that I think is very, I don't think it would pass fiduciary standard, I'll tell you that right now, is they have a wealth management segment. So I can give wealth management advisors that are under the RILY, flag. It's like, you go to them, oh, I'm your wealth manager. Okay, here's $1 million. Okay, I'm going to invest it for you. They put their clients in the wealth management segment, they take their money and put it and invest it into the companies that they own in their portfolio. So like those shitcos that we talk about. So, so they own the franchise group, right?
Yep.
Which, if I can pull this up here and share it. Is this it right here? Yes. So here, let me just share my screen. So imagine you go to a financial advisor or a wealth manager and you say, hey, I'm going to give you my money to invest. And they could just put in the S&P 500. But instead, they put it into a conglomerate that owns
our brands.
Our brands. Vitamin Shop, Pet Supplies Plus, American Freight, Buddy's Home Furnishings, and Wagon Wash. That has had over the last five.
Freight. I think it's the only
What
one.
I've seen is this one has done terribly lately, like from a loss standpoint.
Just imagine if they still kept Badcock furniture.
In February 2020, American Freight combined with Sears Outlet. I see. So they have had to mark down equity in this, meaning they've had losses in this. In the last 5 quarters, they've had to mark down, I think, almost like every quarter on their ownership in this. So imagine, in 27% of the ownership in this is wealth management clients' money. So imagine like you go to the wealth which I think should deteriorate their wealth management segment. I mean, so it's kind of like, right?
Yeah.
So if we go to, I don't know if we can find, I don't want to spend too much time doing this. Yeah, there's like so many things of franchise group in here. I don't know if I can find 20 or like, anyways, I found it before. I just don't have it like on me. But like if we'd have to look at how much wealth management brings into, I'd love to see like that segment. And it's,
oh man, I can't imagine like the people being told, yeah, and it's gone. And it's like, what? I just gave you my money and it's gone. This line is for customers only.
There's a reference.
So let me look up this business, like their website.
so they had 47 million wealth management fees for the 3 months ended 2024. Did they have for 2023 as well? It's actually up slightly for wealth management fees. That's quite surprising to me.
Services for women. Wow. I'm on their website.
It's up barely. It's hardly up at all. When you would think, actually, that's very bad because wealth and asset management fees should go up in line with the market plus some from people giving you money. In the
I'm gonna
market,
take
go ahead.
I'm gonna take this away from you for just a second. This is B. Riley. They have a whole section, services for individuals, and I was like, "What? Services for women? Wait, so this is isn't this illegal? Like, if I go and I say no, I want that service,
You
and
just
then they
identify
deny
as a
me,
woman.
I'll just get advised by a woman.
You could identify as a woman.
No. I identify as a male, and I want this service.
You'll have what she's having.
Yeah,
Are you not allowed? I don't know if that's illegal, but
that would be right under the Civil Rights Act, denying me a service because of my sex, race, or creed.
you can go ahead and make
I'm gonna
that.
try. I'm gonna be
Do
like, and then I contact Mark Hodes. I'm like, look what they've done. Fund the lawsuit. We got him. What brings down B. Riley is me asking for service by women.
You're the little domino that brings it all down.
Yeah, and I live in a state where I can record it. I need their permission. I can record the phone call.
Oof.
Yeah, gets feisty. And they say, no, we don't offer you that service. You're a man. I'm like, gotcha, bitch. The meme, gotcha, bitch.
Gotcha, bitch. Yeah, so I think this company's going to struggle, to say the least. I would kind of be surprised if they're here in the next 2 years. I mean, you never know what's going to happen. Another COVID could happen. It's not the most highest conviction short I have, I'd say, but I find it very hilarious when you have a loss of $1.71 per share and then you issue a 50-cent dividend per share. It kind of tells me what management's thoughts are on the business itself. They don't care maybe to.
Dude, what kind of garbage business is this where it's like you're offering this? What an obsolete product.
Your advisor guide to appropriate selection on.
It's such an obsolete product. Low minimum investments lets you diversify across multiple models at the same time. $15,000 for mutual fund models, or 25,000. Like, why do you need more for an ETF model?
I have no idea.
They're
These
just
are all
hoping some
commissions.
sucker gives them the money. Investment solutions, click here. We work with understanding that a successful investor is informed and educated investor. That's why we have systems in place and technological tools to help our clients understand their own portfolios and why. Scam. Can be good, but everyone offers that. Scam, and commodity.
No, I mean, I wouldn't think anyone would argue that they have anything differentiated about this. This company, I don't know what institution is fundamentally along this company. The only thing I could see happening is a short squeeze. That's it.
And even
Which
then,
we are immune from.
yeah, like someone out there, as far as insider or meaningful ownership, has been dumping shares over time. And those that are long and are calling for a short squeeze have been harumphing many harumphs, noticing.
Yeah, it's like, I mean, GameStop's not a scam.
And GameStop's not levered.
Well, anymore.
Yes.
I don't think it ever was. Even
Really? I thought it
It had-
was.
it had capital leases. Did they pay off the debt when they did their first fund?
That's what I'm saying. They paid off the debt with their issuances.
They couldn't have had that much debt then.
Yeah. They had no. Relative to market cap, man, they had a lot of debt. It was like 400. Yeah, 400. They had 800 million in 2018, 471 million in 2019, and then 2021 comes around, 216. It got demolished to 40. It got demolished again to 28. Now it's at 17 million.
Is this? Well, no, that couldn't be inclusive of capital leases. Never mind.
No, yeah. If you
there's
include
no way.
capital leases, then you got more.
Yeah.
Lease obligations, I mean, you have 187 million. And then 386 long term. 187 is current.
Well,
And you have like over $1 billion in cash and cash equivalents.
yeah. No, they have 2 billion now.
They have 2 billion.
They just finished an equity raise. Yeah.
Oh my lord. Dude, this company's gonna survive.
Oh yeah, they're gonna pivot.
What are they gonna pivot into? That's hilarious. This company.
They'll be a holding co.
The funny thing is, like, the company's gonna survive, but the apes aren't gonna get any. Like, they're not getting any. They're like, oh, I'm gonna hold.
Unless they were super early.
Even if you are, like, the way they are is like, I'm selling when it's like 3,000 a share.
I don't think it's gonna get there.
Okay. Well,
All right. Any closing thoughts?
if you don't like shorting, just watch this company, then have fun with it, because it's gonna be a fun ride.
It is definitely going to be a fun ride. Oh, we talked a little about Uber. Bob, Beth the dog.
Or is it Boba the dog? Because
Boba the dog, sorry.
Yeah,
I
Boba
can't
the-
read right now. It's getting late.
It's all good.
Thoughts on the next FOMC meeting? We're all screwed and we're going to die. And I don't think it matters ultimately. It's going to matter in like short-term fluctuation, but it doesn't matter.
Oh,
I think
the poll.
inflation, we're going to see it potentially come down. Oh, I left the poll up. Crap.
Yeah.
Forgot to reel it in. Where did I put the channel? Oh, I'll just go here. All right, let me close the poll. So do you think there is an AI bubble? 63% of the people said yes. 37% said no. Okay. My response is, I think, nuanced. In some areas, yes. In some areas, no. But I think that if you're thinking like AI spend is going to slow down as a bubble, I don't think so. I think we could have like a bit of like a temporary reduction, but I don't think that over like the next 10 years it's going to be less than what it is today.
Yeah. Who
You
gets
need to be
what?
nimble.
I think that there are some really dumb companies that are getting benefits right now from this craze, and they're going to get whacked once people realize that they're just, as Leo was saying, a warm body. But that's it. Dex says, sell it all today before the meeting. The Fed wants us all broke, you geese. Long KKR, long Galaxy Digital. Oh, you're the Galaxy Digital. Oh, I know who you are. And long crowd. Dude, the Galaxy Digital one? Man, I don't get it. Oh, that's a minor, right?
Maybe. I'm not sure.
No, that's I forgot. It's not a miner per se. It does mine, but they do something else too. There's your Bitcoin play.
Oh yeah, that play.
Yeah, it's not only a miner.
That
I
kind of
remember.
miner.
Yeah.
All right, guys. Well,
Yep.
I'm
Thank you guys so much for joining us in tonight, everyone. If you guys are watching and you're new to the channel, feel free to subscribe, like. If you're on Twitter, go ahead and retweet if you so wish. Like the tweet or the video on the tweet. And then if you're also curious, you can see in the description we have the timestamps and the link to the investing club. With that being said, thank you guys so much for watching, and I will be seeing you guys on the next one. Bye.
We'll do it live. Okay. We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks. Yeah.